What's up, everybody? Good morning. All right. Whoa. S&P. DD band touch in the last. Oh, gosh. Oh, man. Finish up our trading day already. Not even the heavens. Morning, guys. Let me turn chat on here on the Zoom call. What's up? Good morning. Good morning. Good morning. Good morning. A little pre-market move, like the S&P gapped up, traded up, futures moving higher. We'll see if we can find some trades today. Good morning, good morning. What's up, y'all? Oh, good morning. All right. So we put out a major patch last night to address the scanner disconnect issue. So you guys should be excited about that. Hopefully there's some stability there. It's not all of the stuff we're doing with that, but it's a big one. And this should decongest the scanner a lot. So I hope you guys are excited about that. The scanner has been transmitting a lot of extra data that didn't need to be transmitting. It's kind of like congested. So yeah, looking good. Ooh. Man, nice crowd of bed. I don't even comb my hair. Look like a slob. Good morning, guys. All right. Champions. Ready to crush it today? Yeah, we did. Up here and crush it. Let's see if we can make turn into a good trading day. Last week was good. Last Friday was good. Just remember, Friday was like a pretty decent trade by the book. Every single time trade set up, all my really high probability setups turned up. I made like 4,500 bucks, I think. Remember, something like that. You guys here at the Rock Scooter Crew in the morning. Good morning. Nasdaq press and DD band as well. What's moving us pre-market? I'm gonna get up and read the news really quick. Okay. One seems to know. Well, let's figure it out. Let's do some sleuthing. Figure out. Chicago Fed national activity October. Click more, view more. Chicago Fed national activity this morning. Pre-market earnings. Could be just earnings. Trading my own account or prop firm accounts. So all of the above. So I am trading my own account. A. B. I'm trading funded sim count I have had with another. So basically, I'm funded with Elite Trader funding with real money. So it's a real money account, number one. So that's there. Number two is I still had a crap ton of sim funded accounts with a competitor of theirs that I'm still using for payouts. And number three, I'm trading my own account, which I always have. The best option I have. But in addition, I basically mirror my own trades in all the accounts. I don't do anything different. And, trading with free money is nice, even though it's taxed pretty heavily. What do you have? No problem. It's like Elite Trader Funding has funded me to the live elite stage, which is like after all the sim funded and payouts phases and all that. Promoted to the highest level of that one, which is where they give you real money to trade. So I have a real trading account with them, or not with them, but with a broker, but through their organization. Yeah. So it's a a K1 chip trading account. What's up, guys? Good morning. DD Ban already tapped on Nasdaq. What's going on here? Pre-market, huh? What do we got today? No earnings this morning. Bath and Body Works the only one that's above $1 billion market cap. Up 21% in price change. It's the holiday season, guys. Go buy your candles. Yeah, it's not earnings today, so I don't know what the pre-market other than forecasting Fed stuff. Oh, let me show you a little bit right now. It's market calendar today. After market, it's a decent sized spread here. Not the biggest earnings day. No, so it's not earnings that's making it move. It's certainly not. Actually, now in the Fed, maybe, but something going on around the world. In the news area of nuclear war and fighting. Israel and Lebanon have agreed to terms of an agreement to end the Israel-Hezbollah conflict. That'll do it. That should be it. At 8 o'clock. Here. 15 minutes ago. News wires. A little pre-trading that, but that's started moving right about 8:30 on no volume, and then started moving here. A little insider move on that. Sounds about right. Okay. Increase my mic volume, please. Oh, all right. Give me 1 second. Okay, so a little pre-market ups. You guys know how we do it. I don't normally trade outside of these DD bands. Here. Wait. The mic volume low? Or is it good for everybody? I'm blasting like full green bars. Maybe turn your volume up, or maybe turn the music down. Sounds good. Okay. Rashawn, turn your volume up. See if that helps. What's up, Ben? All right. Good morning, everybody. Justin, JFK, Hepcat, Terras, Arsh, as well as Simon and Beavis. You guys and friends on Zoom call. We love y'all. It's been a lovely weekend. It's our first week with Pickle the dog. Okay, I'm gonna tell you some cool stories. We open in 15 minutes. We have some time to kill. So he's already figured out how to break out of his enclosure. And every day I go downstairs and he's like literally at the bottom of the stairs. Like 6-week-old puppy here. I walk downstairs. He's up there looking at me. I'm like, oh crap. What'd he chew up? What'd he break? Nothing. Nothing's touched. Everything's fine. He's peed on his pee pad. He's pooped on his pee pad, which is inside of his enclosure. So he has like we built this pen. Like we're not crate training him. We have the new system we're doing. We have this pen, and he's already like pretty much potty trained himself. This dog is just Literally not peeing on a rug, not pooping on the rug. He has a spot. He's already going. Literally, he's been here for like less than a week. He's been here since Wednesday last week. Figured out how to break out of his enclosure. Second time in a row, I walked downstairs at the base of the stairs going, wagging his tail. I'm like, oh, crap. So we're going to like severely doggy proof the house because we can't keep this dog in, but it's so funny. Neil says, traditionally, how do my levels work before holidays with Sling P8? So Neil, as you figured out like what it is we do here, seasonality and all that doesn't affect it because positions are positions regardless of timing of the year. It doesn't even matter. The positions are going to be the same. Our stuff doesn't have, our technique is immune to seasonality because it's the tried and true visibility of positional risk in the market. So whether there's a tenth of the traders or a tenth of the volume or extra balance, it doesn't matter. The positions are what they are. The market will behave as such. So we've experienced no deterioration as an impact from seasonality on those tools that we give you guys. All right, so looks like we are trading at DD band. You guys know the rules. I have. I don't, as sexy as this sounds, I don't trade above this band. So when the market stretches this far, 1031 on Nasdaq futures, I don't trade above here. And we know that with our stats, right, 4% of days will close up here. 88% of days will close here, and 8% of days will close here. And as a matter of fact, in the back test, when you have this happen, pre-market, or at any time in the session, 1 out of 3 breaches to one side goes to the other side. It doesn't mean I short it to the other side, but it means because of that, I certainly don't long because 1 out of 3 days, I can be zapped a massive amount. And I don't think that's going to happen, but still, these are the probabilities in futures, 4%, 88%, and 8% in our back test. So majority of this is likely to tuck back in with the strong bull move. I'm looking for some bull supports to trade it right back up. Okay, so that's how we're going to work this one today. What's up? Now sounds great. Maybe you're speaking by the side of your mouth. Oh, this might be better for a deal like that, huh? Waiting for good trades. Let's crush it. Good morning, guys. Good morning. All right, Zoom call. Nick, Simon, Neil, Vishal. Good morning, Simon. All right, so that. Ben, Frank. Good morning, guys. Good morning, guys. There's an opening. Let's take a look at S&P futures today. Yeah, I know. It's usually the least fun of all things when you gap up this high. Plus, you're going to have a half gap to deal with. So what we need to do is make sure that we take into account that. So anytime you gap up on futures, you got to make sure you get your half gap in there. It's just like another half gap calculation. 59, 98, 50. Get white, make it dash. Remember that 59, 98, 50. So half gap in a bull market, half gap is usually going to be support. If this is the start of a bull run and not going to fade out, you're going to see volume at this half gap. Let's do the same thing on Nasdaq real quick. I'm just estimating it because I don't have the, I'm just trying to get there quickly. When we get close to it, I'll do a more like exact calculation. I'm just kind of estimating. 29642. Okay. That's near 6 size. Boom, we're there. Okay, cool. Yeah. So when you say chart's not working, well, we can help you. We've got like 10 minutes for the market opens. When you say chart's not working, explain that. You should just load everything up and it should just work as it is. We do have support. We have a tech support in the Discord if you need help. But a couple of things you need to check. I'll give them to you. Number one, check up here. Make sure this says connected, right? If this is green, says connected, you're good. Another thing is this little arrow right here. You click that. Make sure that all of your connections are there. You can click reconnect if things aren't showing up. Number 3, make sure you've added the liquidity map indicators. So make sure you haven't accidentally deleted them. If you delete them, you go to indicators, type it in, and then you add them and it should work. Last thing is you make sure that you have your data feed connected. It'll either say delayed data or it'll say nothing. If it says nothing, then you have your live data. Yeah, so things should be good from here. Worst case scenario, if you have something going on with your browser, a couple things you can do. Go here, click your profile, click settings. It'll pop up another window. Go down to the bottom of the window, click load default, and it'll load all your default settings like you basically just starting over from scratch. It usually fixes 99% of people's problems. And last thing is to make sure that your browser isn't having issues. Like sometimes browser extensions can just cluster up your browser and can cause like instability in the browser itself. You can always try using a different browser or refreshing or resetting your browser cache in browser settings and like basically starting over from there. Or use something like clean. Like I use Edge, and that's like not my favorite browser. I use Edge only for Rocket Scooter. I never use it for anything else. That way there's no extensions, there's no memory use. It's just there for the platform only. Good morning, guys. Worst case scenario, go to tech support in the Discord, which is going to be here. Yeah. So yeah, are you here? I was talking to you. There's a delay on the stream, but did you have any questions or can you help me further? A lot of times you guys, I'll come into chat, ask me a question, and then disappear. That kind of makes it harder to get you your answer, but we're here to help. Go to the tech support and Discord last Alright guys, don't forget. What are my thoughts on scalping short on Nasdaq? So one thing I never do when a market is really strong and bullish is try to scalp short. Even though there's a slightly high probability that we close below where we are right now, 88% of days will close in between these green bands. This is actually from our back test. So if you're new to our group, a lot of our tools historically, we produce back test results to show them. So there's a lot of our settings, a lot of our back test results. There's 88%. A couple 90%, a lot of 70 to 80% probabilities in a lot of our setups. So even though there's an 88% chance we close down here and an 8% chance we close here, i.e. 96% chance we close below this green line, I still don't short bull markets. And that's one of the things I don't do. On the contrary, really nasty markets that hit really strong pivots, I always long up. So one thing I never try to do is fade a bull market. Now, if you guys watch me trade and watch me in all these contests I've been doing or whatever, I show my full performance history and broker statements for everybody here on this YouTube show. The only YouTuber on planet Earth that'll show historic broker statement. Literally. And the one thing people do notice is my win rate is usually 70 to 80%. I'm a high win rate trader versus a low win rate trader. There's two different kinds. And so some people are like low win rate, but they win really big. I'm a high win rate and I'm consistent. So I take like a lot of small base hits in my trading. And the way that my win rate got really high was because I really kind of stopped shorting markets unless there's a really good reason to. You will see roughly like 80 to 90% of my trades are going to be long trades in any kind of market, crash market, soft market, bull market, doesn't matter. So the question being, is it a good idea to fade a short? It's not a terrible idea. It's just never a trade you'll see me take. As a matter of fact, because it's so bullish, my brain is always asking, okay, where's my trade? Where's my indicator to get in? Like, where am I going to long from and where I'm going to get out of my long from? I never see something move really high and try to say I'm going to fade this. And once I started not thinking like that, my win rate went through the roof. Now let me show you when our liquidity maps come out. Let me see. Let me mark this in the chart really quick. I'm going to use SPY to trade S&P futures, right? So in liquidity map, what we're going to show you, and like I said, it's not a terrible idea to do what you're asking. And again, I can't give you investment advice. It's just never a trade I'm doing because I'm waiting for my long entry, right? That's kind of how I like to do it. So liquidity map's going to pop up on the chart, and it's going to show me where pivots are in SPY. You're going to see me trade S&P futures right when I get them. Our base hits with a positive risk and return? Absolutely, yeah. So I usually go for 1.5 to 1 trades for the majority of my trades or greater. A lot of my what we call every single time trades, they're 1-to-1 trades, but they happen like 90% of the time. So when those happen, you see us all get excited here. And I take like, there's this one scalp I do, and sometimes I'll do it like 5 to 10 times in a day. All right, market's open, friends. Let's get ready to go. All right, let me double check where Nasdaq futures DD band is. Right at the cusp right there. I'm going to mark this. So within 2 minutes, liquidity maps will print on Rocket Scooter. We're going to look at that and see what we get. So right out the door, let's see what the resilience numbers are looking like. We had a patch release this morning, and I think the resilience process is turned off. Is that like for everyone else? Okay, here we go. Liquidity maps. Perfect. Okay. So one of the things I don't do is I don't trade above this band, and in setups like this, I usually wait for us to fall. Let me get down here really quick. Okay. We just need to restart the process because it's turned off, so we're going to look at that in just a second. You can nearly hedge pressure. Yeah, so we had a little, basically our process froze. We're getting it restarted. 1 second. We just had a big patch this morning roll out, so. Hey team, what's up, Annie? Good morning. Yeah, so this might be one of those sit out days for us today. We might not have anything to go off of. So a lot of times whenever you get the DD band tapped, there's usually not much when it comes to trade setup. Well, the question is, do I want to take this one today? There's pretty much a setup. 4% of days close above. 88% of days close below. Inside the bands. 15 points up, but I don't know if I want to take this one. Let's see the QQQ, and let's look at SPY. But outside the band, kind of the same thing. I mean, we have like a really big drop on SPY. There's really nothing. Wow. There's really nothing to trade off of either. Apple's the one that's moving the market so far. Problem is a lot of times you don't get any good actionable setups. So it's kind of blah today. Boring. Yeah, so just to refresh your page, we had a one of our processes cut out, and we're working on getting that done in the server right now. So my our techs are reporting there's an issue on the data side, so our data provider is having an issue. So we're talking to them really right now. So I was writing them. Okay, there's really no trade setups today. That's kind of the sad part. Apple moving the market so far. So a lot of times, whenever you do get movement like this, there's not really tradable. That's kind of the worst part, is that you're not always going to get good setup. So Apple will watch today. Apple has a 230 pivot on the bull side. Any pullback and spike QQQ might represent where it probably went along from. You guys know me, I don't normally fade off of DD band breaks to the upside. Only 4% of days will close above, and 96% of days will close above the upper band line. This is our stats from our back test, which is really cool. Now I don't fade that, even though the odds are really high that it can fade back to the middle. Instead, I use that idea that it can fall to a strong bull pivot, which I do take, which means any time from here, that is very low. Wow, but inside of here, there's long setups from there. Yeah, no setup entries today. Boring. Yeah, there's really not much. There's really not much of a trade setup today. All right, let's look at this. All right, guys, monthly maps are back. Let's talk about the greater market. So here's a cool thing I'm going to show you right here. I'm going to pull up my cheat sheet and teach you guys how to read this. The market is super bullish right now. This is good. This is really good. All right, so cheat sheet. Monthly map is one of the things that'll help you look at the market and try to forecast what's going on months in advance. This is one of the most solid tools that you can have in your arsenal, especially for long-term outlooks. So this little cheat sheet right here is going to allow me to see what the market is doing up through March of this next year. Which you guys to follow very closely. There's 4 quick and easy steps within 1 minute. You yourself can answer the question your friends are asking at the water cooler. Is this market going to sell off? Or are we going to rally? Okay, number 1. Are we in a bull zone or bear zone? What kind of market we're in? Right now, we are trading inside of the dark gray, which is a bull market. Okay, write this right here. 1, bull market, bull. So right now, there's really no trades. There's no trade setups other than really strong bull trade setups. The problem is that I don't trade above these bands when the market moves too much pre-market. I've trained myself to sit out on the upside of this because majority of the bull moves trickle higher and can fade back in below that green line, but I never try to fade a bull market. So when you put those two things together, I usually just sit out in these big up days like this, because a lot of times you don't get a lot out of it. I've learned over the years to kind of stay away. The next step is, how is the bull market changing over time? What you do is you draw a line at the bottom of these gray boxes. So simple to do. And you can see that the line is sloping down over time. When it's sloping down over time, the bulls are longing more. So not only are we in a bull market now, but we're in a stronger bull market through March. Bulls are bulling harder. Bull up through March. So more bulls are going to step in between now and then. You think this is the high, this is just the start of the rally. So we had some warnings leading into last month's expiration that we might have a topping pattern in NASDAQ, but the topping pattern, at least now for the S&P, is gone. Number 3, how's the bull market behaving? You're going to draw a line at the top of the bull's bear zones. And in the same light, the bear zone top is also sloping down. When they're both sloping down like this, bears are exiting positions. It's also going to be filled with a short squeeze. Which is double bull market. And number 4, volatility. Pinching together, pulling apart. It is nice and steady, non-volatile, completely liquid market. Increasing liquidity. No volatility. This market is going to just melt up. Wow, okay. It's really good. Volatility. Somebody asked me, do I normally short? Do I try to fade a strong bull market? And the answer is I usually don't, because things are nice and strong like this. So I look at markets like this and I tell myself there's really not a lot of volatility. When you short the market, you want to see, right? You want to see the ability for it to pull back pretty quickly, right? When you don't see that, the problem is that without volatility, you're not going to see movement. Through March of 2024. This is time. You see at the bottom? This is bullish and short squeezing until March. This is the strongest bull setup you can see. This is lovely. QQQ. Click, you do the same. QQQ still showing some resistance here, but it is disintegrating faster, and QQQ is getting back to that sort of same pattern. Now, it's not necessarily as strong of a bull market as S&P is showing, but the short squeeze on Q is real. Nobody can deny that the fuel right now of the S&P and NASDAQ are both fueled by short squeeze and bull market. However, NASDAQ is still fueled by short squeezing. And let me show you something. The commitment of traders, S&P futures, commitment of traders, as you guys see, one of the things to take note of is that the bull position is sloping up. The bulls are becoming more bullish over time. And the short position, which is the blue, is also sloping up. So even right here, you can see both of them are sloping up. So the short hedge fund is squeezing, and the long is asset managers. They're longing harder. So the monthly maps come to the same conclusion, projecting into the future what the commitment of traders is doing, which is good. Oops. So, and that's projecting through March, right? So commitment of traders is the way for you to look at. This is the S&P's price over time. This is forecasting that the longs are going to long harder, that the shorts are going to short harder or squeeze harder. This market's going to speed up. So when I look at that, I go, okay, so when people ask, maybe I should fade this, market's moving too high. As I learned is to never fight the trend, and we got two really solid ways to identify the trend right now. So I don't normally fight it. Hmm. Monthly map for Bitcoin. If there's an ETF, we could do monthly map on it. So it looks like today there's no trade setups. There's really nothing to take off of today's move. So a lot of times days like this are really boring. Yeah, so no trade setups today, unfortunately. This is kind of the sad part. No trades. So normally, when you're above DD bands, there's nothing we usually do. So this is normally a sit out day for me. If there is a pullback, the hedge push, I usually take the long, but this one was just I wasn't paying attention and missed this one. Yeah, we're back inside. But this is usually going to hold inside of here. If by whatever reason we break down, let me show you some of the setups here. So on this one, these are some of the stats. Under ideal conditions, which you do have today, these are some of the stats of our backtest, which is awesome. So 90% of days will close above or close on the same side of the orange line that you open up. So 90% of days will support here. 80% of days we will support on the same side of blue. So 80% of days will bounce here. So 90% here, 80% here. Only 4% of days will close above the green line. 96% of days will close below the upper green. So as you see, there's some really strong pivots inside of here, which you see right here. And for the small chance that this breaks, it's along right back up to here. So there's big ups in case there is a selling day from that support. There's no fading. This is the strongest bull market we've seen in a while. So any selling pressure, I'm going to be looking for longs to get in on. On the future side, it's looking pretty clean. Like that's that setup there. So let me go ahead and draw There's a hedge pressure there. And that is 35 points lower, so that's... That futures half gap is here. Iron Condor kind of day. Yeah, pretty much. So we're going to have blue hedge pressures here on the S&P. Qs, similar. S&P is really low today, so that's the supports are way down there at the bottom. So Nasdaq futures, kind of what I'm looking at today for some momentum. Let me draw in here these lines. There's that, and then there's 2840. It's going to translate where those MHP and HP is. So equivalently so. Draw this kind of like right where it was. And about here. So let me mark this up this way on this one. Right, 4% of days close above here. 96% of days close down inside of here. 80% of days bounce and close by the end of the day through here. And about 90% of days, give or take, will bounce and stay on the same side of orange. So ideally, the trade setup today, by the way, this is that half gap I was mentioning earlier. Futures have gapped up, hit DD band, starting to fade back on here. Inside of here, this is the ideal long setup for today for big runs. So if we fall all the way down the MHP, that's my ideal trade. So I'm actually excited to see this happen. This is my ideal setup. So what I'm going to do is wait for it to pull back just a little bit more. Take that high probability 90% setup if I can get it. Let me go ahead and draw this green arrow. From here to there is ideal. That's the ideal setup today. Highest probability. No, there's an issue with our data providers today, and I don't know if they're out for holiday or what, but usually they're on it like right when it is, but I emailed them. Getting something funky going on with their data side. I'm gonna wait for that MHP tap and take a long off of that guy right there. Went for my big setup from monthly hedge to hedge, which is the really good setup I want to get. Big. Let's get down there. Let's get down. Come on, fall down. Let's get my target. There's that half gap. Anytime you touch half gap on futures, that's always going to be a high volume pivot. There's a high volume on that one. 2847 is a gap fill. Oh, that's right at MHP, dude. Pretty much right on the edge there. What's up, Diddy? What's up? Good morning. Good morning. Good morning. I was right about the pullback probability space. Dude, our back test is rock solid, and the stuff that we teach you guys here, trust me when I say there's a reason we're kind of like gaining a lot of popularity. You guys might have just seen a sprout, or our popularity sort of sprout up overnight. We've been around for a long time now. People are starting to finally notice. We're getting some tweets and some shout outs from some major influencers lately. They're all starting to take notice of what our little Quiet Geek Club has created. It's very exciting to get the support from the community. Something really cool that we do here. You guys want to see? Let me give you guys a link to go check out. All right, so right now, Elite Trader Funding is doing 90% off of all their stuff for the Black Friday sale. So if you guys want to load up on your 20 eval accounts, go get them while they're practically dirt cheap. Use our link, it gives us credit, even if you use their coupon code. So yeah, just stay on the futures chart because it's the equities data provider. They're experiencing an outage right now on their side. And they're troubleshooting it right now. All right, so inside of here, I'm waiting for that dip to here. So one of our tools called DDBand, it's a futures exploit of margin requirements, states that these are probabilities of where you close for the day historically on a back test. So if you take our courses, you click that link right there, you'll be able to take all of our courses for our Black Friday thing. We don't normally sell them. Normally you have to have access to the platform to be able to take them. If you guys just want to try learning what it is we do, how can I get 4%, 90%, 96%? Where can I get all these numbers from, right? So normally if you subscribe to our platform with the tools and the trading platform and all of that, the courses are packed in, but for Black Friday, we yanked them out. No platform, but just for 20 bucks. You guys can take all 20 of the courses. It's called 20 Days Profitability Mindset Masterclass. Now I've traded national trading competitions, global trading competitions. I peaked top 5 in the Robbins Cup, futures trading. I was the futures trading champion of the Elite Trader Funding October annual contest. Number 1. I'm a live funded trader. I've advanced to the prop firm all the way to from sim to sim funded. Now they've actually given me real money to trade with, which is one of the rarest and highest honors you can get with the prop firm. And so, you know, I trade my real account, but hey, you give me free money to trade, I'll trade with your risk, not mine. So now I'm hustling ETFs money on the stream. Which is good. Anyways, 20 days, 20 classes, and honestly, you can read the reviews, what people have said. There's, I guess, 64 of them on the Rocket Place. It's all customers that things they have bought, things they have bought. You can read everything they've said. Amazing tools, quality, consistency, the best thing I've ever seen. That's all down here. Techniques unlike any other, most information-dense trading instruction you've ever seen. Wow. Like no other price action-based tools I've ever used, and I won't be going back. Like this kind of stuff is from actual customers, and you guys see these names in the chat, so I didn't pay these guys to put a gun in their head and tell them to say that. But for Black Friday, we made it where it's like 20 bucks. You guys can take the courses just because it's $1 a day. We're not going to make any money off of that, but we want to get the word out. And we build this platform with all the revenue we generate, which is even the best part. I have a staff of 20 engineers and developers and people in-house to create this experience for you guys. We exploit things in the market. We do no technical analysis, no charting, no candle analysis, no pattern analysis, no overlaying trend line indicators from your technical indicator list. We don't use any of that. So I don't use technical analysis anymore. I don't use fundamental analysis anymore. I don't even change the time frame of my chart. It's 1 minute and never changes. I don't look at historic data when I trade. I don't look at yesterday's chart. I don't care what yesterday's highs and lows are. I never did that. I don't use VWAPs. I don't use volume profiles. I use none of that. I've thrown it all out. I trade on a simple support and resistance method that we created that looks for high volume pivots that are predictable. Any line that you see on my chart was drawn there before the market opened. Every line on my chart is predictable, high volume, because we exploit the mechanical part of the market. The green line is based on margin requirements. You guys might know that you can use margin requirements. Define volume. This is based on market makers hedging. This is what we call a gamma exposure model. This also is a gamma exposure model of the market makers, but for monthly options only. This is an IOP. You guys have never heard any of these words before. IOP half gap. This is a CME calculation. Explained. So by the way, Yeah, so we reinvented analysis in the modern market to exploit things that are consistent in the futures market. I've read every patent that the CME group has ever put out. I turn a lot of them into indicators for you guys. That's an engineering degree behind my big ass head over there. And I'm really sad that the rocket scooter light went out, and I've been troubleshooting it with these guys that made it, and the dimmer switch is broken. But they're like, can you take it down and take the dimmer switch and check it out? But since I'm moving, we got a new house. I'm going to be moving in 3 weeks. I'm going to take it down anyways. So we don't get the beautiful glow of the rocket scooter behind us. What are the rules to be wary of? So the rules, probabilistically, these are all mechanical parts of the market. Basically, we just give you the lines, pressures, and the numbers, the probabilities. 90% of days will close. So these are probabilities of where you close relative to where you open. Only 4% of days historically will close outside of this green band. 96% of days will close below the upper. 80% of the time you will close on the same side of the blue that you opened on at 9:30. 90% of the time you'll close on the same side of orange that you opened on. So with these arrows, you can see that there's a small chance that we rally and go, i.e. we went and came back, right? So I didn't take the long. Everybody asks me out the door. I'm usually like, I don't want to take it, right? Boring. There are setups from here to here, which this trade, a lot of people did take. In this group, I didn't because I was busy fumbling with the platform. The ideal setup is to bounce from here to here. Let the gap fill long from there to there, and I'm going to take that trade when it happens. I appreciate it, bro. Yeah, no problem, dude. But the point is that like technical analysis is always like chasing price action. But like we got rid of all of that. There's no multi-time frame analysis, nothing. Like you never see me fiddle with my chart at all. I know the supports, the resistances, and in the 20 days profitability masterclass, it basically teaches you a start to finish strategy on how to do risk management, but like consistent risk management. We start with some premises. I promise if you guys take the classes, the very first class will be such an eye-opening experience for you. There are people that went and left reviews after the first class. There are people that went and bought lifetime after the first class. It's such a big, drastic change to everything you thought you knew about the market. That's why I tell people like in 3 days, we'll give you your $20 back. And I'll tell you all one thing is that in the 8 years we've been around, I've never had in 8 years, one single person ask for a refund in the 3 days. It's the record we keep shouting on screen. 0 people have said, I don't like this. At least they take all the classes and you walk away learning something really awesome, by the way. So we never really sold them. And then for Black Friday, we're like, whatever, let's just get a lot of people. And we had countless people sign up for it. It's all futures related. It's all probability related. It talks about the probability. I think the biggest takeaway is a lot of people leave those classes and they really stop trying to fade markets. They stop trying to short things. They're always looking for setups and the direction of which way the market goes. And the market's predominantly going up all the time. All right, guys. Gap fill. Overnight MHP is 2707. Yeah, it's like way down here. So this is me converting equities monthly hedge pressure. It's our equities data issue, or our data providers having issues right now. I went ahead and converted, roughly speaking, where that equities hedge pressure is. How the data provider outage coincides with the patch release. Yeah, so it's the data's actually been out since Friday. We just didn't notice until today. Hold on. Do you need to know math? No, absolutely not. Like, trust me, we kind of like do the math for you here. Okay, so let me get it exactly. 5 of 60, 505. That's 16 points on NASDAQ. So 40, 64 points lower from here. I'm just doing the exact conversion. Okay. No, it's all like basically support and resistance. That's basically it in numbers. So the CME IOP half gap is a procedure that the CME group uses to gap futures up, which is what we saw yesterday, right? Sunday night, market open, futures like, boom! You go higher? Yeah, we're working on it. The data providers, so we're getting a message that are because we're getting a message that we're not getting access to this data feed, and they're like, yeah, you have access. So there's something weird going on our end. And it could have been something related to the patch that we did put out, but we'll see. Okay. Just wait for that orange line to tap. I'm gonna get on the long side there. So normally what I do is I'm just waiting for my setup. So these are high probability setups. I'm going to wait for it. I'm going to tap it whenever it goes. Right. From here, we're going to go 3, 5.3. It should be adjusting the calculation about 90 points lower from about here. About 820, give or take, is where that is. Okay. Ideal setup, orange to blue. Don't touch MHP. Yeah, that's what I'm looking for. MHP long. We'll see. How do you calculate between QQQ and NQ? Oh, it's just cross multiplying, dude. So you'll take like, you take your, and again, it's gonna change in real time because NQ and QQQ, when you divide the two together, is a fraction. And then you basically take your QQQ level and then you divide by your futures level. So this is the price of QQQ as of now. Price of Nasdaq futures as of now gives you a fraction, right? Fraction equals, it's cross multiplying, right? So you want to calculate your futures level, move that there, you move that there. And essentially you do a fraction, but it's in real time. So since this fraction never the same, your levels will like dance around if you do the conversion. So I'm just estimating about where it's going to be. But the reality is you want to watch the other level. So as this is falling, this is about where it's going to be. But as it's falling, I'm going to go to the chart and watch. Yeah. Does any of you convert like a futures value to an equities value by cross multiplying? That value is going to dance around. We call it the dance. Actually. You trade copper with this? Is there an ETF for copper? I think so, yeah. Let's see. What's the best copper ETF you got? You can do a liquidity map on pretty much anything. Going for copper? Yeah, we get a liquidity map for copper. CPER. Top J. Not liquid enough. ICOP. These are some cool names. So yeah, so, since you have a really strong one, CPER, that's kind of the one that we do have a good liquidity map for. The other ones don't have enough data to really give us a good calculation. But yeah, CPER has a liquidity map. It only has monthly hedge pressure though, so it didn't really pass any integrity checks for like walls, but at least it has MHP pivots on it, yeah. All right. We're waiting. We're waiting for that hedge pressure tap. Let's go. We're going here. So half cap's getting a lot of support here. I still want to wait for the MHP tap. I don't place a limit order, Bull Bear. I just usually go straight to it and wait. Like, I don't like to reveal my... I know I'm a little old school. I don't like to reveal my hand before I do it. So I let the price action go. And it depends on the state of the VIX as well. So right now, VIX is below what we call our triple B level. And it's two different states of pivoting, right? When VIX is above triple B... I'll just do this, lesson B. So VIX right now is in the state of this one. But when you're above triple B, a lot of times you can overshoot your pivots before you go. So I usually like to let it overshoot and reclaim. Right now we're in the state that it shouldn't overshoot. So I'm gonna hit it like right on the money. We're in that state right there. So a lot of times, depending on the way that we're trading, is another reason I don't like to just rest a limit order. As it's falling and it's red, I just jump in. The bid is lowering, the ask is lowering, so even a market order is just as good as a limit order. It drops into your order as it's falling anyways. So liquid enough that it's not gonna really make much of a difference. Inside of here, this half gap usually is the support that it tries to have. But we're gonna wait. I'm gonna wait for the bigger, stronger setup from here to here. So longing from here, trimming out there, holding, well, you know, holding a runner to go there is not much movement. Maybe another 30, 40 points. I can't wait to hit that Nasdaq, boy. It's gonna be good. Today I'm gonna trade Nasdaq today. So Vishal, what I normally do is trade to what's called next resistance. The next resistance philosophy is I trade from one high volume pivot to the next. So today, this pivot to here is my next high volume pivot. So I usually will set a trade to the next place I can predict where volume will be. So right now, volume is predictable here, as you see. Volume will be predictable here as well. So I trade from volume pivot to volume pivot. That's it. Then from there, I can calculate reward and risk, and then I know if the trade's worth it. 140 points on NASDAQ with a 40-point stop. So definitely a 3.5 to 1 trade. It's good. Makes sense? I did in the Robbins Cup. I peaked in the top 5. The best I ever did. And then I fell off the top 5 as everyone else started going. better, like doing better, and then they don't tell you what your rank is after 5th. So I don't know. Problem with the Robbins Cup was that after, like, basically I got into the Robbins Cup because everyone was talking about it, right? ICT was talking about it, Trades Matt was talking about it, Patrick Wyland was talking about it, Brett Simba was talking about it, all these people were talking about it. And it became the hot topic of 2024 was that if you were anyone worth your weight in gold or worth your weight in anything, was you're going to compete in the Robbins Cup because everyone's doing it, so don't be left out. And it was like, if you're not entering the Robbins Cup, you suck, you're scared, you want people to see that you suck. And everybody was like, I'm going to enter the Robbins Cup. And there was all this, you know, some people are calling shenanigans, like you can open multiple accounts and trade which one and that. So TradeSmart had a great idea, and it was one account, give him the account number, and he'll be the custodian to make sure everyone's trading one account to make it, you know, a fair pee-pee shake contest. As you could pee the farthest, if you may, in the influencer world. And I thought it was a great idea. So I made an account, gave Matt the one account number. Matt made an account. I think ICT made an account. A bunch of people made an account. And Matt was like the custodian of it to make sure like nobody was calling shenanigans. You know, like, or nobody was doing something like trading 2 accounts and reporting the winner kind of thing. And then, so within like the first couple weeks, like Matt made it on the leaderboard, made it in the top 5. And then I think he fell off the leaderboard because basically Robbins only tells you the top 5. And so you don't ever know where you're standing, unfortunately. And then Matt fell off the leaderboard, and then I made it to the top 5 as well. And I fell off. And then a couple of weeks later, I think Matt made an announcement on his YouTube that it wasn't worth his time anymore because Robbins Cup does cost a lot of money in commissions. They charge a fee on top of the commission. So you're basically, when you're trading minis, you're going to lose 25% of your profit to all of that. If you're trading micros, you're going to lose about 40% of your profit with all the fees and stuff. It's ridiculous. It's a complete cash grab from the Robbins group, and they don't budge on that at all. There's all these API fees and stuff that they tack onto it. So Matt was like doing okay, but because of the fees, he wasn't making any money. And that's what he said. He's like, the fees are too much. Even when I break even, I lose a lot of money. He's like, even if I make a decent trade, I lose it all because of the fees. And it was kind of like a pain in the ass. And I agree with him because I've had many talks with Robbins himself to beg that he gets rid of all these commissions and fees and just make it a free or fun, easy comp, just like normal broker fees. Robbins like, yeah, well, we don't really want to explore that. I was like, well, dude, you get like 100 people into your contest every year. Wouldn't you like 10,000? Like, these influencers have reaches of millions of people to your brokerage account, and you want to be like stuck in the 1970s model of, you know, we're you know, broker and these are our fees, and we're like, dude, influencers will push your brand to sky high limits, but they don't want to budge. He's a nice guy. I've had like 10 phone calls with Joel Robbins over the last couple of years about this very thing. You know, trying to get the name out there and yada yada. Anyways, so my thing with the Robbins Cup was that as it turned out, everybody who said they entered, apart from me, Matt, and ICT, who had given Matt our account numbers, everyone else lied about entering. Every influencer who mentioned it lied to their dirty little teeth. Just to Photoshop their name into it. And I didn't go in there to win the Robbins Cup. I went in there to say that I'm the best trader of all these influencers. I went in there to whip all their asses. One-on-one, straight up. I didn't care about beating all these folks in the Robbins Cup. There's some very good traders in Robbins, like Ivan. These guys are solid. They're hard to beat. And I knew the competition was going to be stiff at the top, but I went in there to whip the shit out of some influencers. So when I found out that apart from the 3 people who did enter, everyone else that was talking about it lied through their teeth, I was like, fuck this. I'm here to beat people that I know. I'm not here to just lose all. I was going to waste money. Like, spending money on these commissions is wasting my time and money. But it was worth it so that I can hold a trophy over my head. While these other influencers who are really bad at trading, you know. And once Matt gave up, Matt and I were having fun. We're like, oh, this is cool. We both made it to leaderboard. Matt's a really close friend too. Matt's a good guy. And he was like, yeah, I don't know. I don't know if I like this. It's like wasting my time and money. I'm like, yeah, once I found out all the people I wanted to beat weren't even in the contest, I kind of didn't care anymore either. But so I do other trading content. I do a ton of trading contests. Anyone that pops up, you guys always send me information about a contest. You'll always see me get in it. So those guys that are in the top 5 in the Robins, they're all very solid traders. They're all really, really good. I still have my account. It's still okay. I'm just putting like 0 time into it. Oh, Ivan fell off the leaderboard now. I don't know who Brent Carwell is. Tyro Trade. Wow, these are some really... Ryan is still in the top 5. Ryan's good. All the names are new. These are I don't know these Italian names. Sergey and Marcello, I don't know them. Nazri Khan was on there. He's solid. I follow him on Twitter. But yeah, like I thought I was excited to get into it, but there's really not a lot of people that compete in that thing because the fees are too high. I could guess on top of my head there's probably 100 people in that contest. All right, our data providers just figured out what was going on. They fucked something up on the back end. Big fat red candles. Oh yeah, oh yeah, oh yeah. Did me and Matt go way back? Tracer Matt and does he use rocket scooter? Matt actually uses rocket scooter. He does. He was a big fan of the resilience indicator. I've since convinced him to focus more on the zones, and so I don't know if he's using them though. But he loved resilience as a influence indicator to his strategy when trading through the zone. He should have won the contest. He didn't mention these concepts on stream. He uses it like sparingly, but it's like with any other trader, right? They have what they're good at. So a lot of times, you know, Matt's made a few videos about rocket scooter. So he's used it plenty of times. But I think like a lot of times anybody that does a thing, they just stick with what they're good at. But he's always used our stuff. Like that one particularly, yeah. I don't know if he uses it actively on his stream because he streams at the same time as me. But I don't think he ever used it actively. I think he has a lot of his tools open on another window. Oh yeah, dude, back in like 2018, 2019, I think when Matt started streaming, we used to be the same size before Matt blew up. So I remember when his streams had like 200, 300 people watching. We were both like, we're really active in each other's communities back in the day. Then he just went like super viral and got real big. So waiting for MHP tap. See, the thing is about my setups, I always wait for them. I don't ever try to get in early. I'll miss out on the trade if I don't get the trade I want, which is really good for profitability. All right, Zoom, head over to YouTube. We're going to close out the Zoom today. No traded setups yet. Just waiting for that MHP tap. You guys head on over there. Ransom. Okay, so let me explain something to you about how how that calculation works. Let me use SPY to make it really easy for you, okay? So if you look at any given time, let me see if I actually have my sheet open. Let me show you something cool. It's a great observation. So let me show you something. Oh, I don't have Thinkorswim open. Oh, yeah, I do. Yeah, I do. Okay. This is not updating. Okay, so if any given time you take S&P futures, ES, and you divide by SPY, right? It's kind of like equal-ish to 10. It's like not equal to 10, but it's equal-ish to 10. They both trade like they both trade, right? Independently, but they're both kind of like tracking the S&P, right? So like if somebody's like selling ES in the moment and buying SPY in the moment, they're gonna like, but they're both gonna go in the same direction. Does this make sense? Ransom, pay attention to what I'm saying though, just like what they're saying. Okay, yeah. So they're gonna like trade like this. So that fraction's not necessarily equal to 10. So it changes. So if you want to convert one to the other, right? So I want to take like, I want to convert, and if I were to say like a target, right? ES, I want to create a hedge pressure calculation out of the actual SPY hedge pressure. You got it so far? The ratio should be similar, right? So I have this fraction right here, 10.xxx, whatever it is. So if you take these values, which are both known, what's ES and SPY now, like in this moment now, they're always, now is always a different fraction. So therefore that ratio was always a different ratio. Just like simple cross multiplication. Take this fraction times your hedge pressure. So what is it? 580 times some fraction will give you some value of S&P that you calculated. As that fraction's wobbling around, converting a number, it's going to be different each moment you convert it. So it dances around just a little bit, and that's relative to that fraction that's dancing around in real time. So the thing is that you can't, those people in that channel that do that conversion, they got used to doing the conversion at 9:30 in the morning. So basically it's anchored at that moment in time. The thing is that's known when you convert everything to one chart, which is why I don't do that. I look at SPY and I look at futures and I watch them together. So when SPY hits its pivot, whatever the futures value is, I'm going to long. If I try to calculate the futures value from really far away, when you get there, you're still off by a significant amount because they're not trading one-to-one, right? They're going to fall at different speeds, etc. So the idea is that when you convert your SPY value to your futures chart or your futures value, like a DD band to a SPY chart, those numbers will dance in real time because they're not trading one-to-one, or the ratio not the same. It's best to have them open side by side. You nailed it. It's that very reason. You nailed it. And so those folks that post that, like I said, I've always advised against anchoring that point. It's more like what they used to do back in the day before we had the platform. This is why they did it. So before we used to have the trading platform, we had a little tiny app that we all used 4 years ago. Actually 5 years ago now. And we had a little tiny app that we would use, and the app would just spit out liquidity map values like hedge pressure, monthly hedge pressure, SPY. And then some volunteers were like, let's convert it to futures for everybody at 9:30 in the morning, just so we know about where it's at. There's a lot of people would just tune in real quick and say, oh, we're above hedge pressure, we're good. That's all they really cared about. Not exactly the exact value. Just like, hey, are we above MHP today? below MHP. Investors that trade on the long term want to know if we're above MHP or something. So that value converted to futures was very important at the market open. Since then, market open doesn't mean anything anymore. You want to know the real-time value of those things that they update. But that group has been doing it for like 5 years, and they've always done it. And there's a little community inside of our community that does it. So what you're going to have to do is you're going to have to watch it. And then just put them side by side. You know about where it is. What I do is I tell myself, okay, it is 30. So right here, from exactly here, it is 3.1 in QQQ. And you know that every one QQQ is 40 points of NASDAQ futures. It's a 1 to 40 ratio. So 3.1 times 40 is 12.4 with the decimal move over 124. So from this exact candle, from this exact moment, at 10:43 at the end of the candle, I'm going to drop at 124 points. So here, minus 124 is 817. About right here. And then as it's getting close, so I'm like, okay, it's about right there-ish. So when we get closer to it, I'm going to reformulate it there. So right now I know about where it is. See how I had it at 20 and now I had it at 17? It changes, it dances a little bit. So just calculate about where it is. And when you start getting close to the area, reconvene to your QQQ chart and just watch QQQ. So normally you're going to be watching QQQ anyways for its bounce. But if you're doing it in real time, that's kind of what you want to do. Hold on. Makes sense. The practice though is to put them side by side. And that's what I do. And you guys can't see my other screen. But my other screen has them side by side just like this. Actually, that's SPY. Like my futures is gonna be right here, and my equities is gonna be right here. So normally I'm watching my QQQ chart like this. Might even be better to do that for you guys. Boom. All right, so don't forget, if you guys are doing the Elite Trader funding, if you guys are doing trader funding programs, every 250 bucks you spend with them, your name goes into a hat for a drawing for our group. Giving away all kind of stuff. We're gonna be giving away like trading monitors, probably computers at some point, like trading computers. Lifetime memberships to our thing. We're going to do big prizes for that. So basically, if you're doing trader funding programs, and you like Elite Trader Funding, use our code. They have a 90% off all the evals right now. Literally go load up. They're funding me. So they pay out and they do what they say they're going to do. I'm funded with real money from this company. I'm trading their money now. So they're legit. I stand by them. You guys do the prop firm stuff. Yeah, mindful 100%. The mindset course goes through our indicators. It is 100% dedicated to teach you guys these probabilities and the setups. Trust me. House Pickle? Dude, the dog does not stay. We built this little pen from Amazon. Let me show you what I designed. Like, I designed this little, like, pen for him. It's about like 8 feet by like 6 feet, maybe something like that. And there's a little corner right here where I put his bed. And it's like these little linked, kind of like metal rod with plastic stretched upon it panel. It has these little plastic connectors at the top and bottom. You connect them together. You've probably seen these on Amazon a million times. You can build like shelves and stuff out of these things. So whatever the case may be, he figured he could push on this and it pops this thing out. So like this little door right here, he busts it open every single night. And for the last 2 nights in a row, we go downstairs. You know, so basically we have like a 6-week-old puppy right now. We have an Irish cream dachshund. This is one that It's a rare dog, by the way. Cute as all can be. Smart guy. I go to the bottom of the stairs. Puppy's like sitting right there, like looking up. He's like, Daddy. This is Puppy. Little tail's wagging. He's like, hey. He's waiting, like, I'm like, how did you get out? And I'm so freaking out. I'm like, oh my God, he must have chewed through this or broke through that, peed on this. And I go downstairs, and in his little corner, his little poop and his pee spot, like he breaks out, takes over the couch, sleeps on the couch, walks in here to take a leak. We haven't even done much to potty train him. So I guess the breeder did a really good job. It's about 6 weeks old at this point. Yeah. So Pickle just basically like potty training himself. I'm walking downstairs, he shit on the rug. I knew it. He pissed all over this and that. Now as long as it's a clean pad down, he goes back in, uses the pad, and comes back out. He's a very, very intelligent dog. He's very, very excited. But of course, I'd have the dog with the high IQ of the litter. He was like, "This is the fattest and biggest dog I've ever had in the history of the litters." So he's bigger. He's tiny, but he's bigger relatively. So Irish Cream Dachshunds are like this. They look like little golden retrievers, and they're extremely rare and hard to come across. But this looks just like little Pickle. That's not him, but this is Google. He looks just like this. They look like, don't they look like little golden retrievers, right? But in a dachshund body. And this is like what an adult one will look like. They're really fluffy. They have really long hair. That's a regular dachshund with the red hair. But the Irish Cream is white. They're not supposed to be without their mama for at least weeks. Yeah, so basically the breeder doesn't let you take them, I think, until like... hold on. I say he's 6 weeks old. Maybe he's 8 weeks old. September 22nd. Oh, no, he's 8 weeks old. So, yeah, he's 8 weeks old, not 6. Sorry. So you have to wait a certain amount of time before she'll get them away from their mom. And the cutest dogs, everything. Oh, no! This was, iDoc's, this was iDoc's, like, dream dog. Yeah, he kind of looks like this right now. He's just tiny little puppy. Actually, let me go to my IG and see if I can find the video. So we're dog parents now. This has been a crazy year for us because, we've had a lot of cool stuff happen. We are closing on a house December 14th, so we're moving, and we kind of had this talk with each other about what we're gonna do this month. And we get the keys, right? And we're like, okay, we'll just move in January after the holidays. But then we had this desire to set up a Christmas tree at the new house. So basically, we get the keys on the 14th, and we're gonna move immediately that weekend because we're crazy. So now we're gonna move so that we can set up our Christmas tree at the new place. Hold on. Where's old Pickle? I can find in the. This might be loud. Hold on. I'll show you some videos real quick. Still waiting for MHP. Still waiting for that MHP. Hold on. Left. Oh, there he is. You are 100% right. So, like, anything he could climb onto, we have, like, a ramp of pillows. So, basically, like, the entire front end of the couch, it's just, like, piles of pillows at an angle. So, he basically can, like, crawl up there and crawl up. So, there's nothing can fall off. That's what we were worried about was the hip dysplasia. Because they have, these little tiny dogs like this have, like, really bad hips. Yeah, if they fall or jump off of something, that's it. Oops, let me go right to here. But, yeah, that's him. That's the little guy. And actually... click on that. Let me go to hers. She has She's doing this thing. And she's starting like a doggy Instagram because that's how she is. And her doggy Instagram. By the way, if you guys don't know Minu, she's a streamer on Twitch as well. But she's starting an Instagram for the dog. So he's going to have his own Instagram account. We're going to, listen, he's going to go more viral than we could ever go. I'm going to get up to that. Look how cute he is. Oh God, we went to this Friendsgiving last night. This is what it's like. So much food. Come on. Oh God, she's making fun of me. Hold up. All right, so we were gambling and playing blackjack. And after I lost all of our money that we put in, a whole 20 bucks, like she was making fun of me because after I lost all my money to the dudes, like basically, I was like, well, fuck you guys, I'm leaving. And I went over here because the girls had a station for something they were gonna do for fun, and they were building flower arrangements. So my buddies and I were playing after playing poker. They're playing Super Smash, and I thought about getting in on some Smash games, but then like they were really good, so I was like, fuck it, I'm gonna go make flowers with the girl. So she's making fun of me because I was over here building flower arrangements, and they were laughing at me because I was like yelling across. I was like, fuck you guys, y'all took all my money. I'm gonna build flowers. So let me see if she has more doggy stuff. Oh, that's him. Buffers. Here, she got a whole thing for him. So that's his enclosure. That's when we first brought him home. That was his pickup day. This is the house. Lady lived out in like some name, Franklin, Texas. Like 2 hours away, kind of like by Waco. It wasn't too bad. We drove out in the morning, came back in the afternoon. That's the boy. Doesn't he look like a little baby golden? I don't know, he has that same look. Anyways. Yeah, don't let him jump off stuff because of the hips, the elongated body. Yeah. Next is, yeah, the litter of Jeffers had 8 baby golden retrievers. They would almost all go poop in the designated sandbox in their closer. We were surprised. Yeah, they're so good at that. I was completely impressed. Come on, NASDAQ, let's go. You're losing the half gap, so NASDAQ definitely wants to fill the gap. See this kind of pattern right here? This is the IOP half gap. It's that calculation between where Globex closes on Friday and where Globex opens on Sunday. The halfway point. The halfway point is always high volume pivot. IOP half gap is an exploit of the CME group, actually, and it's something that's really good at finding volume. Typically, a good bull market will support a half gap and keep going. But if you're starting to dance around the half gap when VIX is below triple B, we know that we're not going to see a lot of overshoots. This is more likely to fill the gap. And hedge pressure is kind of like right at the same spot. So it's very clear and high probability that we're likely to hit MHP. Are you going to follow Pickle? You guys better follow him. Get those views up. Help us go viral so we can get free pet food. We get sponsored by somebody. You get like Science Diet or somebody sponsors gives us free food. Dachshunds are much cuter. Golden Retrievers are notorious for body odor. Well, they're big. Yeah, well, they're big dogs. Big dogs get stanky. All right, so you know, you guys, so when y'all trade and watch me trade, right? You're always going to see my style is all about patience and waiting. As you know, how'd I do today, right? Calling the pivots, right? 4% above here, 96% there, 80% we close here under these conditions. So these two pivots right here led to this move that you see, right? The pivot, pivot, pivot. They were good trades to take out the door, and I'm almost sad I didn't take that trade, but we were fumbling with our data providers this morning. So the other high probability setup is this orange line. This one right here is a 90% chance, or 90% of days, sorry, that we close by the end of the equities day above here. This one's turning out to be roughly 80% hedge pressure here. 96%. And 4%. This is actually from our back test, and in our courses we'll teach you this. So I'm mirroring that same setup over here in futures. What I'm expecting is to fall to MHP and then take a long from there. Janet Yellen resigned. That was 2 days ago. Really? Will be replaced as Treasury Secretary by hedge fund mogul Scott Bessent. I don't know who is that guy. The Soros Fund Management, the founder of the Key Square Group, a global macro investment firm. Major fundraiser and donor for Donald Trump. Economic advisor to Trump's campaign in 2024. So Bessent is now going to be replacing Janet Yellen as the Treasury Secretary. Oh. Interesting. Gotta be something fishy cooking. It feels like, what is that? Like in the movie Goodfellas, where everybody that has anything to do with the big heist was slowly just disappearing. One by one. Everybody's just like kind of getting out of the way. Maybe it's like a political, like a coup here, getting rid of everybody. I didn't think she was the strongest chairperson for the Fed. Like Powell is, Yellen knew her stuff, obviously, but I think that I find Powell to be one of the most informed and intelligent of our Fed chairpersons that we've had. Trading in Janet Yellen era was always she wasn't as informative, and Powell's very transparent about what they're doing, very transparent about the data they're looking at, and because Powell is almost predictable. You can almost predict what he's going to say. He's so transparent, which is good. You like Powell gets the credit? Right. He doesn't get a lot of credit. I think he's very, very good at what he does. And he was stuck with a very messy situation that he got us out of. Didn't cut rates too quick. Didn't raise rates too quick. Waited for the market to get to all-time highs, post-COVID squeeze. Started raising rates in the middle of a rally, which only put us in a 1-year pullback, and the market barely felt anything at all. And then when the market started falling too close for comfort in October 2022, they started hinting at rate cuts to drive the stock market back up. They got us right into the soft landing. Inflation came down as promised, naturally and slowly as they promised. They didn't promise overnight changes. We didn't go through massive waves of unemployment, even though we experienced a little bit of high inflation. But it's not anywhere close to like the 10, 15, 20% CPI we've seen in the 70s and 80s before. We've seen inflation through the roof. It feels a little hard right now, but that's because the food and energy prices are really high. People are feeling it harder in certain areas, but not all things are going crazy right now. As a matter of fact, housing prices were highly inflated in 2020, 2021, but now they've come down a decent amount, you know. So it's like, yes, things are still kind of not optimal, but it's much better than we've had in the past before. While people are a little, you know, stretched on their dollar right now, sub 4 CPI with very little Fed activity other than a lot of chatter. They've only barely done anything but cut rates a little bit. It was exactly what they needed to do, because back in 2020, when they shut everything down because of COVID, I told everyone it's going to create hyperinflation that's only going to cure itself a decade later. There's no cure to cost-push inflation when the cost of raw materials due to scarcity goes up and the cost of labor goes up due to a pandemic. There's nothing anybody can do to undo that. There's no handle the Fed can do to lower inflation if that was the source of the inflation. The Fed can dissimulate lending, which slows down spending, which can stop hypereconomic activity boom from inflating prices through the roof in a period of that kind of hyperinflation. He could slow down banks lending you money pretty quickly by raising the rates through the roof. Banks get more money on the deposit with the Fed rather than betting on you paying them back over time. So that happens. That can slow down inflation very quickly. But this type of inflation couldn't be slowed down by any other mechanism other than people going back to work and companies not laying them off. And then companies over time paying them lesser and lesser salaries as more people go back to work and the demand for labor goes down. Because in COVID, when everyone went back to work, the demand for labor was high and there wasn't a lot of available workers because nobody wanted to go into the office. So then people got ridiculous salaries. And to cover those ridiculous salaries, companies had to raise prices. And the people that didn't get that ridiculous salary couldn't afford the thing. And then the only way to fix that is to let it slowly trickle out, like drop like a bucket full of water, and it drips out little by little. And the only thing that heals that is time. And all Powell had to do was drive the stock market so it wouldn't collapse. But they also didn't want to carry all that debt on their books to keep the market floating in a period of uncertainty. You know, they've been carrying the market since 2008. So he needed to step back a little bit and let the market fly on its own. And so essentially he just had to talk a lot and not do a lot, which is good. If the stock market were to crash in 2022 as it was falling, which it likely wasn't going to happen, but what would have happened was unemployment would have gone through the roof and we'd be back to square one like we were in 2020. High unemployment, shit's expensive, and then you enter a period of stagflation, which is high unemployment with high inflation. And stagflation is almost irreparable to any degree. It's hard to simulate the economy when companies can't afford to bring people on, and then like basically prices are really high and people have no jobs. So basically in stagflation, credit markets will collapse and crash. Because everybody's going to default on all their bills. They can't afford anything. Credit will default. And then banks will stop lending money and the economy comes to a screeching halt. And then you get to another 1929 sort of situation where you have Great Depression. Stagflation is really bad. So Powell just had to basically preserve the labor market so that enough people can go back to work, that competition for salaries comes back. Powell pays people less and less money. Companies pay people less and less money, which therefore naturally they can start lowering prices. And that soft landing was what Powell was trying to achieve, and he achieved it very gracefully and very quickly. He only had a 1-year pullback in the stock market. It was very mild. No market crash, and the Fed raised rates and then slowly cut rates. And they're basically just keeping the stock market high enough so that companies don't have to start firing a lot of people. And in 2020, we said the same thing. We go, that's what they're going to do. That, huge crappy period of inflation that the Fed can't do anything about it. We said to make sure that people go back to work and stay working. And it'll come down on its own. It did. Powell's kind of brilliant because he said that's what they're going to do and he didn't lie. How do you participate in ETF and ARC scooter giveaways? Okay, so for right now, if you sign up for monthly rocket scooter on December 20th, anyone who's a monthly member have a drawing for 2 free lifetime accounts. They're 4,000 each. So that's one of them. Number 2 is if you go to Elite Trader Funding and you use our code. So the monthly thing is cool. So if you guys just go to the monthly sign up, which is basically just giving you access to the platform, data feed, you get data feed separately, but live data, get the platform, all the indicators, all the tools, Discord, whole shebang for 1 month, and you're entered in the contest. Elite Trader Funding. Here's what you do with these guys. Use our link for all of your evals that you buy. This, every $250 you spend with them, your name goes into a hat. It's like the fish bowl at the pizza place, right? Everybody's pizza place in your town has a fish bowl, right? Every Tex-Mex place in your town has a fish bowl, and you and your comrades go and eat lunch there every day. You throw your business card in there, and then your business card just stays there forever. And once a month, they reach in there and pull it out. You get a phone call. Congratulations, you won a free chimichanga. You know, that's what we're gonna do here with the fish bowl. Is that every $250 you spend with them, we put your business card in the chimichanga fish bowl, and then we're gonna draw a name after enough people have entered. Probably by the end of this year, probably starting maybe January, we'll start doing drawings. So every $250, your name goes in one more time, and it'll stay there forever until you're drawn. And then we're going to do like lifetime giveaways, a year membership giveaway. We're going to basically give away a bunch of stuff just for fun. So like basically ETF pays us like a cut of these sales. I'm taking all of it and just throwing it back into giving it away as a prize. So pretty much. That's what we're going to do. Just to make it fun. In the end, we're going to give away a giveaway. Exactly. Still waiting for this move by the end of the day. Take off. And what else are we doing? We just had our 2 lifetime giveaway, like I think it was Friday, right? Oh, and every single Friday, if you're just here in the stream, we give away 3 free eval accounts. They're all different flavors. Some of them are 100K statics. Last Friday were 50K one steps. So every Friday we'll give away 3 free evals. So you guys can check them out. ETF's one of the good ones out there. They do payouts. There's no shenanigans. They don't deny payouts. They promote you. If they promote you to live, they give you real money to trade with. So I haven't been screwed over yet. A lot of these prop firms out there under a lot of fire. Some of them are going bankrupt. Some of them are shutting down. They're not paying out. That's because they have really weak risk models. And lately, the chatter has been the risk model changes of Top Step, as they just made an announcement to do something that ETF's been doing all along, because ETF is smart enough to see that that's the course of action you take. So Top Step is preventing people now from trading in their XFA accounts when they've been promoted live. And that's a thing with the prop firm. Once you go from sim and you go to funded, it's still sim. That's how it works. It's sim funded. Any money you make comes from the prop firm. You're taking their money. And so when they promote you to live and they give you real money to trade, instead of you taking their money through the sim world, they're like, all right, you're too good. We're moving you to live. We're going to give you real money to trade with. Now you can start taking money from Wall Street. We trust you. We'll give you the risk. Now you go out there and trade against Wall Street. Any millions of dollars you make is from traders. It's a real trading account. So it's a move designed to take their best traders and move them to live because, number one, you deserve it. Number two is you're no longer robbing the prop firm blind of their money because you're too good, which makes all the sense in the world. And Top Step is doing that, and then all the people, traders are just dumb. And I hate to say this, but traders are like, I can't believe you're doing this, Top Step. It doesn't make any sense. God. Because what they did was they let you trade in live and sim funded back and forth, and people were still trading the sim funded, rolling the money into their live account. And these prop firms are just hemorrhaging money through that. What they need to do is move you to live faster. And when they do, they need to cut off the ability for you to sim fund, which to the trader's perspective, you're going to make less money. But from the prop firm perspective, they leave both those open. The risk of them going belly up is very high. And you don't want to be in a situation where your prop firm goes under, because then nobody gets paid out and everyone loses. This is for the betterment of them staying solvent so that the people that do make it here get money to get paid out with. And so the traders were like, I hate the move. I hate this. It's so bad. It's so selfish. You're only benefiting the prop firm. But it's like, if the casino runs out of fucking money, then they got to close the doors for everybody. And you can't have that happen, because the fast track thing So many people have been investing 10, 20, 100,000 in that company, hoping to get a payout. And we're at the payout stage already, and they couldn't afford to pay you out. So that move prevents that from happening. And you have to remember that. Prop firm plan was the best, give you the 100% initial payouts to 1025 put in AMP. That's what I tell people to do with prop firms. Go make your 10, 20K and take it and put it in your own trading account. Get out of the sim to funded 1099, go to AMP and put in an account. $100 minimum. Stop doing 1099, stop doing K1's a profit split, go straight to your own funding. Make as much money as you can, get your payout, and then fund yourself. Best way to go. And the prop firms love when you do that, because if you made money, they made money. They get a cut of the profit. So it's like, it's win-win for everybody. If you go make 50, 100K in a prop firm, sure, they'd love for you to stay with them all the time. But hell, if you take your 20K, give them their 100K back, they made a pretty decent return on their 100K at no additional risk. So it's not like you're going to hurt the prop firm's feelings by saying, oh, you know, guys, I'm going to take my money and go trade on my own. They're like, please do. Because the risk of the trader blow up is really high, and they'd rather you blow up with your money out in the world than blow up theirs. If they give you 100K to trade with, and you pop 20K and you cash it out and went out on your own, they could be missing out on your future gains, but I'm sure that they're glad that they got a 20% return on their investment in you, and they'd probably be happy. I would be if I were in a prop firm. What I would do would be the limit trader. Here's how I design a prop firm. I think they're all going this way. The Top Steps move is already what ETF's already been doing. ETF, when you go to sim to funded and they promote you to live like they did with me, straight up, sim to funded, I'm banned. I can't do it anymore. I'm banned for 2 or 3 years. I can never get paid by ETF ever again. Sim to funded. So Top Step is doing the same thing. Once you move to live, you can't trade their sim funded accounts anymore. And ETF realized that because they're smart. They're building for longevity, which is the proper way to do it. You shouldn't be trading sim to funded, go to live, blow up the money they give you, go back and sim to funded. You know, it's not a good risk model. You know, ETF's one of the first to understand that. But you can still go to another prop firm, yes. So, like I said, if you go to funded and you blow up and you can't trade sim to funded anymore, just go down the road and go to another prop firm. Repeat the process, yeah. But it's smart, and I support the change in the industry because it makes a whole lot of sense. They have to make sure that they can survive, you know. And as regulation is about to change, here's what's going to happen. Like I said, I'm going to predict the future. I made a post last week about it. I'm going to predict the future about prop firms. You guys ready? In the future, you're going to do sim eval, okay? Stage, evaluation phase. And you're going to pass. Then you're going to go to sim funded. However, the major change, and I'm like I said, quote me on this. Clip this video. Sim funded. The major change is there's going to be a cap on how much you can make. And it's going to be standard. Each process is now going to come with a cap. And they might say a cap is once you make $6,000. Now remember, let's just use an example of you pass with a $6,000 profit in the eval stage, okay? So in the future, like I'm guessing, because I'm seeing all the pieces line up, in the future, the sim funded stage will cap you to that same amount. And number two, that's going to be changing with everybody. I'm telling you, in 1 to 2 years, you will see this change across the board. I can almost guarantee it once regulation changes. Payout, it's no longer allowed in the sim funded stage. What should happen is at this very moment is they take this money that we normally got in a payout and they will roll it into a live account. And I think that that's the stage you're all going to go to. Roll that balance over. And then you can keep anything you make after that. Or you can take a payout after a certain amount of days or a certain amount of profit. Or you can take that whole thing they say maybe every $6,000 you make or whatever, you start taking profit. So basically, this money is locked up in that fund, and this money is what funds your account. And when they do this, I think they're all going to do this. They're no longer going to ban your sim to fund it anymore, because every time you make the money, it rolls into a real account, and it's capped. So I think this process, what Top Step is basically removing that step if you go live. I think this particular path will mean to where you can keep repeating this process with the same company, but their risk is minimized to just losing that much. You can't go out there and infinitely make hundreds of thousands of dollars in the sim world anymore. You make a certain amount, then you go live, then you're trading real. Now, how's it benefiting you if they all go this route? Number one, you're no longer banned in the sim world, and if you blow up in live, you start all over. Yes, it's less money, but because this is less risk to the prop firm, risk model, they create all these rules. No DCA rules, consistency rules, maximum trades you have to trade a number of days, rules. Because the rules are to lower their risk. This infinitely lowers their risk, and they can lower their risk this way. Imagine trading these two stages without all those crazy rules. It's likely going to evolve into a space race between prop firms that will now be competing with each other on who has the easiest path to get to live, because they don't have a lot of risk anymore. You only make a little bit of money, but now you're funded in a trading account with a little bit. You can't infinitely make millions of dollars in the sim world anymore, but every time you get there, it goes to funded. And now you can trade and make money. Their maximum loss is $6,000 to you in this account. In the sim funded world, their maximum loss is however much you can scrape out of their pockets until they catch you and then move you to live. And when people move you to live, it's a trick. It's to ban their good traders from funded. But it also is win-win because it's good for everybody. It's good for you in a live account because your taxes are better. You know, think about that. Unless you're making money as a trader, futures account is taxed a lot better than sim funded. You want to be here. And also, my belief is that if they move to this model, then you're not going to have like DCA rules, consistency rules, number of trading day rules. So what it's going to mean is that every prop firm that survives the transition is now going to compete with each other, just like cell phone companies in the 2000s would compete with free perks. Yeah, you can go to Verizon with 600 minutes, so we're going to give you 1,000. Well, we'll give you 1,500. Well, we'll give you 2,000. We'll let our minutes roll over. Shit, we'll give you unlimited minutes, right? And they're going to be like, so we're better than the other guys because no DCA. And they'll be like, oh, well, no DCA and no minimum trading days. They're now going to space race for your business to make their sims infinitely easier because they've already capped their risk. Does everyone understand this conversation? I'm predicting the prop industry in the next 2 years. Do y'all understand this conversation? Around the same page here? So my theory is that while right now live is a luxury for only the best traders, in the future, in the next 1 to 2 years, live will be available to just about everybody. When you hit a profit cap, it's into funded. What it basically does is convert these sim funded firms into actual prop firms. You basically pass one test, then you pass another test, and then they give you money in a real futures account. It's actually a prop firm at this point. We like mistakenly call these things prop firms now, and they're really sim funded trading firms. The prop firm stage is where you are given money to trade with a group that you're in, like a pooled asset vehicle with this group, and you're trading together. They fund you as a trader. So they're basically going to convert them all to real prop firms. You don't think I'm spot on? It's the most logical step, and it's win-win for it's good for the industry, because the fact that they can go insolvent faster, much slower is better. Their risk is lowered, and the idea that they can send more traders to a live account is even better, which means you can go to the tax benefits as fast as possible. And as I'll give credit where credit's due, as Tracer Matt, him and I were talking about it, he found that Top Step had filed as an IB with the NFA. as they've realized when you get to the live stage, why not just open a brokerage account with them? And then they make the commissions on all your trades, which is the logical next step. Welcome to the world of the future where you're and I give him credit to Matt for the one who told me about that. I didn't even know that they file with NFA. But now your prop firm industry now are all going to be brokers. And that regulation change comes. They're not going to be allowed to pay you SIMDA funded, advisory fees that they do anymore. I think they're going to crack down pretty hard on that because of the amount of blowups that these firms have gone under. So instead, they're just going to roll your balance to your real account and let you trade in the exchanges world, which everyone will love because the prop firm is making commissions as an IB and the exchange is making commissions on your trades. Oh, you guys know how much the exchange hates that basically the SIMDA funded world is just a bunch of legally operating bucket shops where you can make side bets on the market without paying any fees to Granddaddy CME. Now, when this regulation changes, they're going to support this industry like you wouldn't believe. This is so much money left on the table the exchange can get its hands on. They're going to move to probably force the SIMDA funded world to become IBs. You can't facilitate any kind of trading or trading activity unless you're registered with the NFA and you are registered as an IB. And these funded accounts, you no longer can work with other brokers. Or you have to work with another broker, but then the SIM funded groups are going to be like, why don't we just be the broker? Why do we need Edge Clear? Why do we need Trade Evade? Let's just do it ourselves. They're all building platforms right now. I have a lot of inside information about that. There's a lot of people I know building their own platforms because they're all building to transition to that step. Top Step already built theirs. There's a couple more building. One group approached us to build a platform for them and didn't really start registering to me why until I heard about this regulation coming in. They're all trying to escape from underneath the Trade Evade umbrella to go be IBs themselves. They lose a lot of money to Trade Evade in this process because of this API. You heard it here first, guys. Prop firm will be a broker. Trade Evade will be a thing of the past in this prop firm world. 2 years or less. Most of these prop firms are going to go under if they can't make the transition smooth enough. You're going to have cap on some funded payouts. They're going to roll you into live, and that's beneficial for every. It's called a Nash equilibrium where everybody wins. It's the best part. Exchange wins, prop firm wins. They'll make more money, less risk, and you get funded faster. And you make more money, and the loser of that equation is Uncle Sam. Because you just pay less in taxes with the same amount of money you made. And the rules will get easier. The only loser in that equation, I guess, is Uncle Sam, because he'll make less money on taxes off of all of us. His futures are taxed better than 1099 wage payments. You know what I'm saying? It's like, I guess like me with my stupid chess brain, I always think of all the pieces, and that to me is the next logical step. If I were in a prop firm, I'd be there now. I'd be pioneering that step. Why they were all talking about taking their test for the Series 3 and Series 7 and stuff? That's correct. To be registered with the NFA as an IB, you have to have staffed agents with Series 3 licenses. Yes, you do. If they're getting their Series 7 and 6-7 to be financial advisors or whatever those are. Now again, I don't know any, like everything I'm saying right now is speculation, but you guys know me. I'm one of the best traders you know because I think I had 20 steps, right? I'm only speculating through the pieces I have. But in consulting with some of my friends who are also very smart, it's the most logical conclusion. So I'm only drawing a logical conclusion. I don't know that any of this is going to happen. I don't know. I just know that one of the top 10 prop firms approached me and wanted the Rocket Scooter team to build their platform for them because we build trading platforms for people. Not only do we build our own, we build them for other people. I was like, huh. And Top Step just built theirs. A lot of people are building their own platforms. Okay. Tops up trying to become a broker. Okay, what's going on with all this? And then it makes logical sense. You can smell it in the air. Regulations changing. The sim to funded world, as you know, it's about to come to a crashing end. Enjoy it as fast as you can. You'll be able to still make money in this world, probably even more so than before. But your idea of, you know, getting funded, going to sim to funded, and then getting a payout in a couple weeks, and then taking your money and running is probably gonna be over. There's gonna be more steps, easier steps, but more of them, and then you're gonna fund it as fast as possible. Neil, the expert here, says Series 3 and Series 2, 3. Oh, you need 2, 3 for the office? Okay. You only need one person in your firm, because you're not really giving... Series 3 is like the financial advisor for the commodities world. Is you need one on your staff, right? Does everybody on staff have to have the Series 3 or 2, 3 for everybody? One person with 3 and everyone for 2, 3? Or is it everyone has to have 3 to be an IB? I don't know the rules of... To be an advisor, you need a Series 3. So, in an IB company, does everyone need a Series 3? Those are rules I need to brush up on. And I'm going to get my trade today. Super boring. Ryan says nice insights. I mean, I've kind of made a career out of coming up with really big predictions, right? So you guys see how today I didn't chase the long, I didn't chase the short. You guys see what I'm saying? Somebody asked me today, is it good to fade this? A lot of our traders do. I just don't. Personally don't. Even though it's 88% of days will close inside of here, I still don't fade it. Because the markets move that high because it's really strong. Actually, when I say 88%, that's inside the bands. The actual spread is 8% outside at the bottom, 4% outside at the top. And 88% of the time you stay stable in the band. So when we split it, it's 4 and 96% below this upper band. You open above blue, 80% of the time you close above blue. Because of that 80%, you see how it's not easily selling off and crashing? You see how it's trying to get right back up in here? You see how there's pressure this way and pressure this way, and so the market's very likely to consolidate there. It's roughly 90% here, and we give you guys these backtest results whenever we do our classes. We actually show you them live. There's 6,000 people in our group. We're one of the biggest like futures groups out there with the membership. And there's a huge community of like data miners and folks that get together and chew on this data. It's not just like us putting it together. It's a whole committee of volunteers inside of our group that does these back tests. And we present this stuff to each other as a team. And this is, I'm telling you, the strongest trading team on the planet. These people don't even work for us. They're just volunteers that love this stuff so much. And a lot of this has been put together by our group, and we give you little cheat sheets with all the information on it. Your IC using your levels, 0DT on QQQ at 50% already. I mean, like, I wish I was spending more time in the options world. The more that we learn that the zones are as strong as they are, So I'm just waiting patiently for the high probability pivots. So blue is always a high volume pivot. Orange is high volume pivot. Green is high volume pivot. All right, at 3 o'clock, we're going to start our classes all over again. We do the 20 days profitability mindset masterclass. It goes through every single thing we teach. This is all futures market stuff. We propose a theory, and let me tell you my genius trading strategy, and I prove it in this class. Did you know, and again, it's a mic drop moment. In this class, did you know that if you, and we do a spreadsheet, like the very first video is designed as an eye-opening experience. You may not believe this, but this is true because we show you live in the video. Did you know that at any point in history, pick a random month, start with a random balance, pick a random time of the day, and randomly long the market, the stock market, and futures. And make it to where you have a fixed loss per day, such that if you lose 20 days in a row, and it's a percentage loss, like X percent of my account, such that losing 20 days in a row in a month, you don't lose any more than half of your trading account. So, random day, random time, random balance, randomly longing at any given time of the day, one trade a day, and you only lose 50% of your account after a 20-day stretch. That sounds like a horrible trading strategy. But did you know that strategy makes a shit ton of money over time? That is the best trading strategy I've ever found. Randomly longing the market once a day, changing your position size to make that your loss is fixed, and even losing 20 days in a row, you still only lose half of your account. Over time, that strategy works. It makes a lot of money. That strategy is employed fairly often in the trading world. Your 401k is fairly much managed in that similar sense. Your IRAs and mutual funds are managed that way. They're always lying in the market, even when it's crashing. It's mind-blowing how great that strategy is. Now, the course is that you read the reviews. Like I said, go read the whatever reviews here. As people are saying, the course is very mind-blowing and humbling. It's designed to reveal things to you that you didn't understand about the market. We call it the blind monkey strategy. It's a blind monkey with a dart. You can throw a dart at a dartboard, which picks a random hour of the day, which randomly longs at exactly that moment in time, the market, wherever it is, with a fixed loss per day, such that after 20 days, 20 losses of that same formula only loses half the account. That monkey will still make money. Doing nothing different. So that the postulate is that the market always goes up. And it does, right? And that in reality, what you do as traders is you spend so much time trying to find a winning trading strategy. And that's a winning trading strategy, by the way. Now, again, there's more to it than that. We don't teach you to do that. But it's a thought experiment, right? There's nothing special about that strategy other than the position management. That's what makes it work. You spend all of your time trying to find the right combination of indicators to get the trade right. But the blind monkey doesn't care about when they get in and when they get out. It's all about the risk management side. Because the market statistically goes up, and there's a lot of cool statistics in that first class. It's mind-blowing, as people are saying. We give you stats you didn't even know. As I draw on my screen stats, all of our stuff is mathematician. By the way, I'm a mathematician, a very accomplished one at that. And all of its numbers, like here is not about indicators or what we want or what we feel. It's like literally these are probabilities that are true. And our members come up with this stuff, right? We kind of work as a team here. Well, let me teach you something. See, the blind monkey technique teaches you that you're doing everything wrong. You're on a journey to find the magic recipe of indicators, right? It's going to somehow make you money in the market. What that does is it proves that it's not your trading strategy that made you money. It's how you bet in the market. Brian's excellent at that trading strategy. You're trying so hard to guess the stock market. Should I short it here? Should I long it here? Which way it goes? And in reality, you don't realize that the stock market really is random. For the most part, unpredictable. Now, we have stats that make certain things more favorable statistically, but the market's still random. When it gets to that orange line or that blue line, I can't predict if it's going to go up or down. I'm betting one way or the other, but what I do differently is I'm betting that right here is where I make my bet. I'm betting that right here, 100% of the time, I will predict that volume will show up out of the woodwork, which it does without ever failing. And I know that my decisions are made only here, and only here, and only here. And everything else in the middle is avoidable because it's noise. Everything else in the middle is avoidable because it's noise. So I've narrowed down my trading strategy to just picking a few spots of importance to trade from, and then trying to bet which way we go from there. So for me, the random trading strategy, quote unquote, that you don't really need one, which is basically saying that there's no such thing as a winning trading strategy, only a winning trader. The trading strategy itself is usually just anecdotal or empirical, like ours, essentially based on statistics. But there's no correlation between any of this. The stock market is, in fact, random by all definition of it. It's unpredictable. The stats are good enough to bet on. Just like in cards, when you're playing poker, if you have 52 cards, or you're playing blackjack, and you haven't seen a jack, every time there's no jack that flips over or no face card that flips over, the odds of the next card being a face card goes up. They're physical odds because there's physical limits to these things. All of these indicators are based on physical limits in the market. Margin requirements calculate this one. Options and options expiration calculates that one. Right? These are real tried and true things. There's a video the CME group made on this process called the IOP, which calculates where they gap futures to on imbalances. Math. It's all physical. It's a math-based thing that doesn't change. So there's certain things we exploit that are consistent, which lead to these consistent odds. Margin requirement, there's a formula they use to calculate this margin requirement, which we get this green line from. There's a formula they use which gaps the futures market, which calculates this white line we trade from. So these things are consistently done the same way every day. Even though the stock market is random, CME group is not random, CFTC is not random. These things are not random. The things they do are the same. Which led to us creating indicators out of the consistent part of the market. Anyways, our strategy is designed to show you that you're basically trying too hard. Why would you do all this extra work to ultimately lose money when you really don't have to do anything trading strategy wise to just make money? Why does your 401k always make money and you can't as a trader? What are you doing differently? Trying to time the market every day. Ooh, maybe I should fade it from here. Maybe I should buy the dip here. Ooh, it feels too high. Maybe I should short it. You're doing stupid shit that nobody does that makes money. Nobody does that kind of stuff. People understand the probabilities of the market or that it almost always goes up. I'll give you a little piece of advice about this first video. It's so good. It'll change everything about the market. You know, 70% of months in the market are green. the 30% of months in the market that are red, 60% of them give 1/3 of their loss back the wick at the bottom of the month and the last week rallies. 60% of those 30% of days. That's 18% of months total that are, or sorry, you'll have a long week. 70 plus 18, like 88% of weeks. Like the last week of the month is usually bullish, like high 80s% of the time. That's you didn't know. It's a lot of stuff that you didn't know. But what we focus on is the part of the blind monkey strategy that works. It's not that the monkey is dumb or doing the wrong thing. He's just joining the market at its predominantly upward state, which is the right approach. Now, again, not just randomly picking a time. We pick high volume pivots as our enter at the market here kind of thing. So it's just a little more regiment to it. But the trick is the monkey's really smart. He realizes he didn't have to guess when and where he gets in the market. He just has to know that he has to maintain an account balance such that the statistics over time of 70% of market months are green. He just needs to survive the 30% that aren't. And your job as a trader is not to find a winning recipe of indicators. It's to find how you survive those 30% of months that aren't green. Because if you do, as I quote all the time, I don't remember who said this, but I quote this all the time, is that there's only one way in this world that you can make money as a trader. There's only one way to make money as a trader. It's as simple as this. It's that you don't lose money as a trader. The only way to make money is to not lose money. It's a risk management saying. You can lose and lose and lose and lose and lose, but as long as you're changing your bet to be relative to the account size and the risk you're taking, over time, joining alongside the market wins because of risk management. Not because the market goes up, because of risk management. You're ultimately betting that 7 out of 10 months it's just going to be long and strong and I'll make back the losses. And that, honestly, is how your 401k behaves. And I'll prove it to you. And again, these classes are designed to kind of blow your mind. Before I get too crazy on this one and reveal the first class, please go watch it. See, in the community of traders, which is a report done in the futures world every week, people, institutions that are, let's make this really big. Institutions report their positions once a week to the CFTC, who then divide you into categories, and the reportable categories here. Asset managers, hedge funds, things like that, they're all in here. Key takeaway is, where does your 401k paycheck go? And so your paycheck goes into your 401k, it goes into this green line right here. I don't care if markets are doing whatever. As this is the 2022 recession we had in the market, the pullback, correction in the market, if you may. Even as the markets are falling, green is dumping position, but they're going in waves of buying as the market dips. Interesting to see that as markets are falling, they're buying cheaper and buying. They're just longing the market. Even though they're dumping as a whole, people are going to cash. There's still people buying dips and buying dips and buying dips. They're going in buying sprees as markets are coming down. Sounds like the blind monkey situation. Market's selling off. You're still finding waves of buyers as it's selling off. Even here, like this last little crash, in general, people are buying. And it's like, when you realize that that's kind of the nature of sell-offs, is that when things are cheaper, there's always willing buyers, right? And like even in 2008, you can go back to all the market crashes to see there's always people willing to buy the dip. I mean, you can't even go more wrong than here's the 2008 crash. From here until here, the net longs in futures was even going up. People were longing the entire time it was crashing until the final stage of the crash. Then they finally started liquidating here. But even at this point in time, at the bottom of the crash was just here, by the way. There's waves of longing. People are longing as markets are crashing because of the same philosophy. Markets just go up. And when it's cheaper, all it does is make it longer. The further the market falls, it's just longer until you get your return. But you will get your return. when enough time passes. And so the idea is that the reason your managed money goes into a long only strategy in your 401k, trust me, they do. They're not out there trying to call market tops and short your market. They're just taking your paycheck and buying stock with it every week you give them the money. Now, they may buy less stock with it as markets are pulling back, but as markets are selling off pretty hard, they're going to keep buying at full force because you're going to make more return over time as they buy dips. First 2 weeks of the month is greater than the last 2 weeks of the month. Yeah. So the neat thing about this is that when you learn that markets behave a certain way, the risk management's really the only way to go. The market crashes are temporary. After this class, a lot of people tell me they don't really short markets much anymore. But that's because they find out that the statistics of the long side are just so strong. Even when markets are selling off right now, you don't see me going, aha, let me go ahead and short this. I'm still waiting for my good long dip to buy. And I'm going to stay on the stream till I get it. But I'm not betting for a reversal. I'm going to trade it to like my next pivot, right? Let's see if I can get something out of it. Am I streaming Tuesday, Wednesday, and Friday? Oh, wait, it's Thanksgiving this week, huh? Wait, the market is closed Thursday. Wait, no. What is the schedule for Thursday? The futures market schedule. Hold on. It's a half day on Thursday in futures, right? Usually the case Thanksgiving. Okay, so Wednesday, Globex closes at 4. Equities open at 5, like normal. Thursday, pre-open state. So pre-open is a halt state before stock market opens. So futures is trading half day on Thursday and reopens at 5 for Friday's trading day. So basically, Wednesday night is Friday's trading day. So there is no Thursday, but futures halt at noon like they normally do on Thanksgiving. So Thanksgiving morning, I'm going to be cooking the world's best turkey. I make the best turkey you ever had, by the way. I'm starting brining that bad boy tonight. My turkey typically is a Monday, Tuesday, Wednesday, 3-day brine. I have a whole process. It is like the juiciest bird you ever had. So yeah, so basically I don't stream on Thursday as you guys should be spending time stuffing your faces. But Friday closes half day as well. So I'll stream Friday morning. So this is a halt day. So basically we have a half day Thursday, half day Friday. I'll stream Friday. Tuesday, Wednesday, I'll stream. The fact I say Brian, some of you guys know, that's how you do it. It's a thick bird. See, like every year, it depends on how many people. We have a big group this year, so I got a 22.5 pounder this year, which I've been trying to go bigger and try to like increase my skills in making a bigger turkey. But a bird that big, you gotta brine it for a long time. Those half days are usually mad. They usually are. Last couple years though, they've had some strong. If I remember correctly, we've had some strong bullish Black Fridays. Go bigger, that's what she said. Now, here's my brining recipe. I use vegetable stock, by the way. It's a whole different flavor. Vegetable stock, brown sugar and salt, just like normal. Use allspice berries, black peppercorn. And then I take candied ginger, puree it up, like smash it up, and cook it into a little bit of the vegetable stock to get the ginger flavor in it. And then I chop up a bunch of those candied ginger pieces and put in there, and then I pour the ginger infused broth in there. So that's basically my brine recipe. It's the best. I'll do anything else. I don't put a lot of herbs, nothing. Not in the brine. Sugar, salt, ginger, allspice, pepper, vegetable stock. It's good. It's really good. And then I put ice, and I ice it down in a 5-gallon paint bucket. And then basically like every 4 hours or so, I scoop out. And I make extra brine, by the way. So I scoop out a lot of the melted ice, put fresh ice on the top, and then pour more brine into it. And I do the traditional method. I don't do like people put their turkey in bags, people fry their turkeys. It's all good, but you want like the juiciest, like best turkey with the best gravy. You gotta do it the old way in a pan. Put the pan in the oven. You know, cook it with some liquid in the oven. Like I put like ramekins of stock in there, some kind of liquid so it stays humid. Cook it really hot, really fast, crisp that skin, seal it up. And cook it low and slow after that until it gets to temp, and it's good. And then all the fat that drips out of it, make your gravy. I'm telling you, I've had people that said they don't like turkey, like my turkey. That's because everyone remembers having like dry-ish turkey, but this is like a long process. I cook it low and slow all morning long, so it takes a long time to cook. A bird that size probably takes like 4 to 5 hours. So I get up early Thursday morning and cook. Friday night I pre-prep all the sides. We got like maybe 10 sides this year. We got a lot of people coming over. Next year we'll be at the new house, so maybe we'll be hosting like big Friendsgivings. I'll tell some of you guys about it. We'll throw like a huge ass party or something. Dude, I want this MHP so bad. If you have a turkey that's been brined, you won't go back. Hashtag knows. You have to. That's why people don't like dry turkey. I mean, people don't like dry turkey, and that's why a lot of people don't like turkey, because it comes out dry. You can't just throw that turkey in the oven and start cooking it. Any kind of poultry that you put in the oven, you got to cook it low and slow after you brine it, after you char that skin up. And iDoc, who's here now, she's the one that eats all the... It's funny because I don't eat a lot of meat skin. Like... So anytime we have like meat, I'm always like putting my skin on her plate. And she's like eats all the stuff I don't eat. So you want that crispy turkey skin? That I'll at least eat that on my end. So I don't do anything special. I don't inject the turkey. I don't. If you brine it, you don't need to. It's just extra stuff. anything that you inject the turkey with usually will drip out of the turkey anyways. You want to brine it so those cells swell up with water. That's what salt water does. It's an engineering problem. It's a diffusivity problem. Concentration gradients. You can put like, a lot of people like, you know, whatever, infuse with butter or things like that. But anything that you infuse in the turkey doesn't necessarily soak up into it, especially a fat. It will usually just drip out into the pan. And the reason I don't infuse it with much is because I just want the turkey fat by itself, and I make the best gravy in the world. My gravy is so good that it turns to gel in the fridge. It's all because it's all made of fat. When you microwave it, it's like the smoothest stuffing approach. Yeah, I bake the stuffing separate. So I do like a deconstructed fancy stuffing. I don't do like a congealed bread brick, which I also like the old stuffing as well, where you mix egg and bread and all the spices. My stuffing, I take sourdough bread, I cut into cubes, and I make a whole bowl. I take a loaf of sourdough. I'm going to go get it tonight, actually. Cut into cubes, little tiny squares, and then I toast the cubes all one at a time. Like I literally toast them on all sides like a grilled cheese with butter. Butter in the pan, spray the pan and just toast them. Get them nice and toasty, throw them in the fridge. And then I take that bread, I'll make Italian sausage. Straight up Italian sausage. I'll take some sage, some onions, some celery, chop it all up, mix all of that in with the stuffing. Crack one egg on top of it, and then just loosely, not like pack it in like a bread or scrump it up together, but like loosely mix it around. And then I pour that back into a pan and then I cook it. So it comes to where it's like loose. It's not like packed in like a bread, but it's like it's like bigger chunks of bread. Going to lunch, making you hungry? Yeah, I don't know. Like the bread brick is cool. And you would cook it inside of the turkey. But I do it that way because the stuffing is actually more like its own side dish rather than like an accompaniment to the turkey. Has a really good flavor with the sausage and with the gravy. And in the turkey, like I don't stuff the turkey with that because when I cook the turkey, I put like the aromatics in it. So I do apple, onion, spices, cinnamon sticks. And the turkey's like infused with that on the inside. Cat nose ball. There you go. It's my favorite thing to cook every year. Like I'm known as the cook in the family, so I'm always trying to find a way to like cook for a big party or have like a big spread for people. So I like to host and cook stuff. And this year we're doing, God, iDoc has the list, but we're doing like, you know, your traditional stuff, mac and cheese, mashed potatoes, green bean casserole. I'm making Parker House rolls from scratch. I usually make rolls from scratch. iDoc's making an apple pie from scratch. Vietnamese family, so all of her friends and Vietnamese friends that are coming over are going to be stopping and picking up, you know, to-go foods from different Vietnamese restaurants. So we always get like a mix of American food and Vietnamese food. It's really good. So there's always a good spread of variety of different things. Who wants to go extra? Look, man, and no, I even go so extra. I grow all my vegetables and herbs. So like, you know, I even get it from my own garden. Organic grown herbs, baby. So much more flavor in the store-bought. By the way, I have too much this year, so we need to be giving that stuff away. All right, MHP coming in. Let's go. Getting close. So today marks the day where we start over our 20 days courses. I promise you guys, if you haven't signed up for our courses, it's only $20, okay? For 20 days, literally $20. And it's only going to be sold for another week and we're not going to sell anymore. It comes part of the membership and it's free. But it starts at class 1 today. We start all over from the beginning. We go through class 20 and then we start over and go through class 20. Then we start over and we keep doing the same things so that you can catch back up and go. So today we start over. Sign up and just come because you'll be at course 1. It's live. We do it at 3 o'clock Eastern, 3 or 3:30, so close to market close. And we do a 1-hour live session of training every day over the strategies. Let's see what's up. So today, like, just if you guys want to just learn all the stuff we teach for Black Friday, because there's a lot of people that were coming to the stream. We have so many people introduced to our stream lately that they were like, you know, curious about what it is we do. And then we just said, hey, be fun for Black Friday, that we just basically let people come to the courses. Usually you'd have to sign up for the $200 a month membership to get the courses to go with the platform. And it comes with our trading platform. So we would teach and give all the lesson stuff for free for people that use the platform. So it's kind of like a light version. You don't have to go pay $200 to come to the class. This is only $20. So for Black Friday, we've had 500 people sign up. It's been a huge hit. So yeah, I know I'm missing resilience today too, right? We've been emailing back and forth all morning. There's an access point issue on our end with the data provider. The data feed isn't down, it's our access point. We've been basically modifying some things on the back end. And so our connection to the data feed, we put out a patch today, but it's unrelated to that patch. It's more related to another thing we've been working on and trying to optimize. It's all back end server stuff, so. We have a connection issue to our data provider. The data provider is doing okay. So we're in the middle of troubleshooting that right now. I know I miss resilience too. Hey, we still have our liquidity maps. We still have our data. Still looking good. Oh. Now it's like when you open up WebSocket connections between two different points, you basically have to tell, you have to basically initiate a connection and then say, hey, I'm connecting to this. This is where it's the endpoint I'm getting in here. You have to set it up that way. The computers have to know how to talk to each other. And right now our computer is hitting a brick wall trying to talk to their computer. And they're like, you guys are fine. And we're like, oh. So we found out that there's some things that they need to fix on our end with our access. So we're doing some modifications, not just to the software, but to the backend as well, to enhance the connection issue and to make it to where the platform disconnects less. So we're switching up things with our data provider, but there's a step that needs to be done to restore the access. So we're basically connecting to a dead end at this point, and so we need to switch over to this new endpoint. Really. We're trying to upgrade things on the back end. We've been working on that for the last couple of weeks. One of the problems is that, you know, without having candle data, because the stock market is down over the weekend, when you change something on a Friday, you'll notice it till Monday morning. What's up, iDoc? Yeah, Brian, you should come over. Y'all should come over to Thanksgiving, man. The darker blue are your actual dynamic hedge pressures and futures. They're other futures pivots. So I know it's a little confusing because right now I'm squishing them all in the same chart. This and this are from my equities chart. I just converted them over just to have them. You have a same spread in futures that also create high volume pivots. It's a very similar philosophy, but they just have a different balance point. Futures will also have high volume pivots from the blue. So, in the blue and the orange. So futures has like pivoting this way. Equities on the same note has pivoting this way. Futures has pivoting this way and this way. Equities on the same note has pivoting this way and this way. So I'm just basically shoving them all, and I use different colors so I know which one was which. So futures has a monthly hedge pressure and hedge pressure estimates. Equities has monthly hedge pressure and hedge pressure as well. So these two are from here. These two are from futures. So I just crammed them all into one future chart because our stock data is not connected today. No problem. Am I trading the London session overnight? I'm usually not trading the London session. I'm usually in bed. Their market opens. I'm in Central Time Zone in the United States, so their market opens past midnight for us. Oh, let me see if I have something I'll share with you guys. Something else I was making. Hold on. Maybe I have it still up here. I'm redesigning my new office in the new house. So basically, since we are crazy in this household over here, deciding that we want to have our Christmas tree up at the new house instead of having it at the old house. We're like, let's just go set up the Christmas tree here, but like move in January. We were like, no. We were like, no, let's just get the keys and like move in that weekend. And so essentially I had a few videos to go off of from where we're looking at the house. And you know me, I engineer everything I do. So hold on. Let me make this big enough for y'all to see while I also focus on my trade. So I've been like redesigning my new office in a way. My new studio, and I got to figure out a way to do this. Maybe you guys have some ideas. You know, we always have a cool studio thing going on here, right? I have a trading desk with 6 monitors and a tablet that's 7. Oh, my trade's about to come off. All right, cool. I'm going to have another desk with a big screen monitor for trading, for watching movies. I'm going to have furniture in the office so I can chill. So it is a 15 by 10 room with 2 windows in it. A door right here that I am so mad swings this way into the room. And a door right here that swings this way into the room. I'd like to get maybe sliding doors. Here we go. Here's a hedge pressure. I want to tap that today. Fun. Right, I'm gonna get close to it. I'm not getting in early. Yeah, 15 by 10. This is like a 2-scale 15 by 10 grid. I estimated 2 feet per door, but they're slightly bigger. 2 feet per window. 2 windows, which I'm kind of mad about, and all the office opportunities that I have in the new house. Windows in it. This one has a window right there. You can't see it. It's off camera, but there's curtains in front of it. And I need a soundproof room. I've got 2x4 fiberglass panels. 1, 2, 3 to dampen the room. There's fiberglass corner panels as well with bass traps. So I basically record in a studio. That's how I get this nice, like, non-echoey sound in my microphone. So this is all the black is soundproofing. These are windows with curtains. This will be the mini fridge. The problem is I have to ask you guys a question. The most important thing in the world is the camera is now going to be on the right. So instead of this side of my face, you guys are going to look at this side of my face. Which side is sexier? With the camera on the right? Camera on the left? Camera on the right? Camera on the left. Off camera is very... Fuck you, Ryan. Seriously, I can't do camera on the right anymore. Because I can't put the desk here, and you got curtains back here. I can't put the rocket scooter sign. I can't put the rocket scooter sign here. Well, I probably could put the rocket scooter sign here, but I can scoot everything this way. And I got a door swinging into the desk. I'm kind of stuck. So the question I have is, should my desk be facing the wall here? And we can do left camera or right camera that way. But I have another desk. I'm gonna put my gaming setup. So I used to have my gaming setup here on this main computer. Instead, I'm gonna do trading and gaming and also have another trading station over here where I can put all my laptops to do all my other trading. Basically, like, I'm trading in so many places right now, it's so hard to keep up. I got my accounts, the contest accounts, ETF. When I'm competing in contests, I usually am like, I've got my prop account's open. I got my real account open. I got my ETF live account open. And then whatever contests I do, I have those accounts open. I need separate computers to do all this stuff. So I'm going to have like a separate little station here for gaming and extra trading rigs. I'm going to have like laptops there with monitor that they can connect to. I could basically like turn around and walk behind me and you'll see a whole nother trading gaming station behind me. It's too symmetrical. Yeah. So I basically have to deal with 2 windows here. I get a space for the mini fridge and the Roxyr logo. And the thing is do I want the desks right behind each other? Or do I want the desks like catty corner like that? And I thought maybe I could put like a little chair here. And then if I get bored, I can just sit here and actually see the big monitor. And I think that's what I'm going to go with. The whole new design, a whole new layout. I'm going to deck out all of this to look super cool. And the new camera is going to be like basically pointing this way. You guys get to see my sexier side of my face. I might, iDoc, if you're looking, I might put that big, tall bookshelf thing I have right here. MHP is around the corner. We're close. Oh, actually, hold on. I need to, hold on. Refresh. Update the data and see we're close. Over 590, about 90 points. 4 times 9, 36 from here. About at 810. Oh, wait. 9.4 to 5. Here's 37, 38. About 804. It's lower. Almost 40 points lower. So we're going to be down close to the 800 level now. Do you guys see how when I tell you the number dances around, you have to watch them both together? Not going to trade it early. So if you guys like the new office, it's going to be sick. It's big. It's a big room. These are different like rug sizes I'm testing out. It's going to be dope. So full production studio. I'm going to have, I didn't draw the padding around the room, but it's going to be fully like, it's like when you come in my office, there's just panels everywhere except for this back area right here. But the rest of this side, it's all paneling on the roof, on the side. So it's acoustic treatment. So it's like a movie theater in here. Come to MHP to consider along. Yep. Yes, sir. Right about 20,800 is where the longs can come in. So don't forget to sign up for the classes today, you guys. 20 bucks. It's $1 a day. $20. You can take every class we teach. We start at class number 1 today. We start over. And we go through them live. We teach them live and we answer questions live. I'm still not going to go in early. I'm going to let it hit MHP. I'll be right back. Don't go anywhere. Got a present for you guys. Hold on. An eye doc and a pickle.
Oh, he should have yawned into the mic.
Hey, boy.
Chat would have heard him go.
Hey, buddy. Hey, buddy. Doggy slobber.
You haven't washed your face today, so he's just gonna wash it for you.
Oh, yeah. Ooh, almost time to make a trade. Pickle. I'm gonna long a hedge pressure today.
Are you gonna long it like how long he is? How long he's gonna get?
He's pretty long, yeah.
That was a really bad
That's
joke.
so funny, though, because he's a dachshund. He's a very long dog, and I'm a very long trader. I would get the longest dog.
Look at his yawn. Look at his yawn.
Yep. Oh, so funny. Alright, it's almost time to make a trade.
Yeah, everybody thinks he looks like a lab, Michael. The miniature lab with the wiener component. Oh, did you hear him yawn? Sorry, I know this is like a serious stream. Totally just destroyed that vibe.
It's always serious. Yeah, we're getting close to the trading spot. Alright, Pickle. Say bye to chat.
Say bye to chat. Okay, bye.
Bye, guys. Y'all are so funny. We're close. I have to keep refreshing and we get really close to it. About 30 points to 112 from here. Yeah, right about 810 is where it's going to be. You having to do one? Tap it again with one on the break. I mean on the bounce, sorry. Oh, it's so hard because I have to refresh this. I keep thinking it's there. Close. Okay. You shorted cattle this morning? How'd it go? I'm still freaking early on this, so 810 is it. I'm gonna let it overshoot, and then when it pops back up, I'll take it. So I have to refresh this every time. Our data feeds are still waiting for those things to turn back on. I am early, damn it. It would be the rarer case is to break this and keep going. If I break this, minus my stop loss, I'll be done for the day. MHP breaks are pretty bad. Well, no, it's not opening trading view. I have futures data. It's just the converting of the stock MHP to the futures MHP to make sure I've got the right level. So, like, basically refreshing this to see what 505 converts to. Bounce right away from daily FVG. Oh, fair value gap. All right, there we go. There we go. There we go. It's moving. It tapped the low. Oh, it did. It did. It did. Okay. Shoot. Let's take it. Got in way too late on that shit. Come on. Come on. Trying to sell. It's so hard without the real-time candle, though. Why you hate me, market? Come on. Come on. Come on. Uh, 3 hours of waiting is worth $475. 90% bounce chance. I'm doing it without even having live candles on my chart because I don't need them. That's the thing. I don't even need candles anymore. I don't even need a fucking chart. I just need my level. That's the best part of Rocket Scooter. Candles are down, ain't gonna stop me at all. Again, I'm early. It very well can do this and this and this, but I know I want to take that bounce if I can get it. There's always pressure off of the orange. Three hours of fishing should be paid off now, I'm telling you. I don't need candles. That's the best part. I don't need candles. I don't even need a chart to trade with. I never did. Now, again, I am early on the trade, but I didn't have this. What represents this yellow line? This is monthly hedge pressures. This is the gamma maximum of options just sold to market makers of the underlying ETF. So in this case, QQQ ETF has monthly options. It's gamma positive here. So you will get longing because of the gamma positive nature of that. There's going to be high volume at this level. And so I'm watching it in futures. 90% of days will stay on the same side of gamma relative to monthly options. 90% of days, if it opens positive, will close up in here 90% of days. Again, we're dealing with a data issue on our end where my live candle data in equities isn't updating, which I'm continuously refreshing, and I have no idea where this level is. I'm trying to convert one to the other. I know. Sandgrill is the same way. It's like doing this without DD and resilience is highly stressful. I know. I'm trusting liquidity map and the probability though. I don't have my indicators to tell me how much I'm hitting it small. Just small. Right at about 3 times 4 is 12. 12 below here. 12 below here is right at 810. So 810 is MHP. So what I want to see happen is I want to see this try to sell off here. And then once it recovers, I'm back to longing that right there. Now, again, I don't have all my tools to go with me. There's the bounce. MHP, there it is. There's the tap. All right. And on the dot, there was that flush candle in futures. That's it. That's what I wanted to see, the bounce. Now, if it fails to hold here, I'll just get out of the way. But that's the big push I'm looking for today. 810 was my calculated low from this morning. Let's see. Fingers crossed. Fingers crossed. That's a great question. PQQ liquidity map. It is a BSD. It's hedge to hedge. Here, 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 here. That's it. That's the only thing I have to go by today. I don't have much else. Another thing would be a lot of times this half gap to gap fill. So this basically was filling the gap, right, on the overnight. It'll be close. Again, scary setup for sure. Oh, wait, hold on. Okay, so let me put a mark on gap fill then. Back to gap fill, I think is a good setup. Guys, listen, this is what you tune in for. This is what you tune in for. Those of you that haven't seen the Rock Scooter stuff, it pivoted on the fucking penny. Gap fill. Right here. Doesn't mean I'm right. But this is where I wanted the pivot to be. If I'm right, I'm going back to yesterday's close as the final pivot for the day. I waited all morning for this. It's still trying to sell. I don't have resilience. I don't have DD. I'm a little nervous right now. I'm like refreshing my email like every minute to see if I got something going here. Here we go. Oh, bring daddy that money. Give me that money. Boys, I'm gonna sit here and just let this ride. I waited all morning for this. That 1 hour on chart is hilarious. The wicks are literally going from line to line. Dude, it's so crazy. It's special what we do here. Special. I mean, guys, look, there's $1,000. So let's let it ride. Have any questions? I don't even have anything to go by, to be honest. So maybe back to here. I am kind of trading blind. Let's just trim to 1, leave a runner. Why not? Whatever. Pocket, pocket, pocket. ETF funded account made $1,245. This is my funded account in Apex. This has made close to $1,000. Just waited for that. It sold pretty hard. I think we're good. I really do. I don't think we're bad. I think we're good. I just left a runner on to let it go. I'm missing all my indicators today. I'm just trusting level to level, so we'll see. Sangreal, how does ES SPY factor in here? Specifically, what's your question? MHP for the win. Oh, yeah. It doesn't take a lot. Like, you guys may say market's been selling off and I just scooped up a couple $1,000 long scalping. Like, I do this all day. Bro, wait, your net went out right for the big candle hit? What? Ah, dude. MHP bounce to the win. You can't hate hedge pressure. Hedge pressure is bae. Let her rip. Let her roll. So basically, ETF live funded account. I'm trading on one screen. I can't trade the sim to fund it anymore because they moved me alive to real money. So this is, I had those 20 Apex accounts that I still had that were funded. These are the Apex ones. So I'm trading all of them together. Can spies low support drag this down? More likely than not. I don't know because our data feeds are down today. So my indicators that I would use to make a judgment call here are all zeros. See right here, like on the screen. So I don't have my best, strongest confluence indicators here, which is why I'm kind of like trading blind off my pivots. So I'm trading with really little risk right now. Literally one contract. Can I tail your trades? I don't understand what that means. Tail. If you're asking me, can you copy my trades? Is that what you're saying? I'm going to tell you a couple of things that please don't. Not only can I not give financial advice, but I would never, just in a logical sense, gamble my money based on something some idiot on the internet would say about what they're doing. As an act of not being done with your money. You don't know me. Even if I was able to give financial advice, I still would advise you not to take financial advice from a stranger on the internet. What you can do, if you like the stuff we have, is you can get the platform yourself and use it. You can, our tools in the Rocket Scooter platform are available. You can get them yourself. We teach you how to use them. I'm not here for people to copy my trade. There's a delay on the stream, so you couldn't copy my trade if you wanted to, but we advise you against doing so. For obvious reasons, not just ones related to regulation. We teach how to trade. Yeah, I don't do an alert service. We're not one of the biggest futures trade rooms in the world because I give out trading alerts on a Discord for $29.99 a month. I don't give any alerts at all. I have never had a trading alert channel ever in the history of my life as a trader. We actually teach trading. We pride ourselves in teaching trading. We make sure everyone here learns how to do it themselves. So Tauntaun, love for you to check out that part of what we do, and you can learn what we do. Bouncing about the HP, I'm glad I trimmed. Not too unhappy with the idea that I'm only trading one contract right now. I'm trading blind without MHP res. My confluence indicator, I got Snow. I got Snow. There. Hey, click the link, right, that just posted by the bot, Tauntaun. Check it out. You're doing for Black Friday, you can do half price for the whole month of the software. And the training starts today, actually. We started over at class number 1 today, 3 o'clock. Everybody here, you guys want to learn? I just pocketed a couple grand trading NASDAQ. Multiple accounts here. This particular setup is one of the main setups that we teach. I waited all morning for it. And if I'm right or wrong, doesn't matter. But I know this is the pivot to be long from if the long trade does take off. It's from here and from nowhere else. So 810 or above is buying power for me to be long from. Oh, you're in India? Yeah, you can buy our platform. It works from anywhere in the world. VIX is hot. Oh, I do. I have Thinkorswim open. Hold on. Thanks, Joe, for reminding me. What's happening in VIX? VIX is hot. Yes, good call on that. But we are actually below triple B, which is good for the month, which I do like. VIX is moving higher, but we're not necessarily... VIX just filled its gap. VIX is below here, so I'm expecting sharp pivots off of my hedge pressures, which is why I'm really happy to be kind of like invested right in here. I could have got a better entry on that one, though. I know, Joe. I got to be paying attention. I'm limited without all my stuff. Joe is correct. I do have Thinkorswim open so I can watch things. I need to be watching the VIX today. Liquidity map on VIX, just to double check. Illiquidity pocket, bottom bear zone. There's nothing to take from there. But yeah, that's good. Thanks for reminding me. Joe's on point here. Wait. I was too focused on getting puppy kisses. Yeah, thanks for looking out. Yeah. 3 p.m. link. Yeah. The link is going to be posted in the Zoom call channel in the Discord. Oh, and by the way, give me a call in 18 minutes, Yaya, because we got to chat. I'll help you with your platform access and stuff. Show you how everything works. Okay. So we have an indicator that helps you understand the power of my confidence in the pivoting action at MHP right here. Forward 16 points still below here, so it's 8. Yeah, it's at the same spot. Or 16 from here. Oh, no. 16 from that candle. That's still at 810. You're trying to move. Breaking MHP is really bad. If it does break, markets can go highly irrational there. So be very careful down in this area. It's falling pretty quick. Jeez, that was quick. That's quick. We need that to hold. Let's hold. I didn't add to it. That's moving a little too quick for comfort today. MHP breaks can be pretty bad on the market, so I might just want to trim. If I don't get a bounce very quickly, I'm going to trim and call it. You don't want to see a lot of extended time trading below here, so if I don't get the move, I'm not going to stick around and let it fall. We'll just get out of the way. That is some pretty gnarly selling pressure here. We've got 15 more minutes to finish out the hour. I don't like seeing that pressure like that. Come on, give me some green. Give me some green. Get back above. That is tough. I might close this out. I only have one contract, so I made money on the first one. Losing money on the second one. It's got a couple more minutes for it to move, or I'm just done with everything. Flatten this out. Be flat on the day. You don't want to be upside down at MHP breaks. That's for damn sure. My indicator that tells me the tiebreaker, not available today. So I am trading blind. One contract, just something small. Nothing too big. Apple needs a hold. Let's check out Apple really quick. A little exhaustion pivot there. My breath. I'm holding my breath. Back above orange. We're good. We tap orange one more time. We get right here. I'm going to add to my long and let it ride. I held through the drawdown. I was waiting 40 points lower on 810. It only got 30 points and anywhere close to my stop loss, which is good. Breaking MHP can be bad, so just be careful. Let's see. Apple holds MHP. Let's see. There's a tap there. Come on, get back above orange. Let's go. Let's go. 8-10 and go. Let's do it, baby. Well, on 8-10 and go. Gonna try to resist. That's the problem. There's resistance pressure from here. If this hold, it's big ups for the day. If it holds, big ups for the day. If it holds, it's big ups for the day. If it holds, it's not. It's gonna fight. It wants to break. It's there's gonna be a lot of resistance pressure. Lots of resistance here. Lots of gamma squeezes on Nasdaq can be pretty nasty. Lots of resistance. 8-10 levels key today, so we're gonna watch this 8-10. It's gonna be a fight. It's gonna pick up velocity if it fails. It is a fight from here, a big fight. If 8-10 holds, it is big ups today. If 8-10 holds, baby. If 8-10 holds, it's big ups today. Nvidia catching a bid. Let's go. MHP for the win. Let's go. That drawdown well within range of my stop. We were totally good today. Woo! I bought the dip again in the ETF account. 1,800, 200, 2,000 profit, 21 profit. Let's go. Let's take it. $21.20, $21.65, $2,200 profit, $2,300 profit, $2,600. Jesus Christ, big ups. Let's go. 3,000 and running. Let's trim. Trim to a runner. Oops, 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 oops. One. Trim to a runner. Holding one. Trimming a runner. Done. The ETF live funded account 2460 profit today. That's in the funded account with Lead Share Funding. Real money accounts, Apex, some of the funded accounts here. Making $200 a pop. Right now, up about 1,000 in that account too. Is the lines based on liquidity from the perspective of market makers? Yeah, Space Bike. You've never heard of Rocket Scooter? Do you guys want to tell him? Y'all want to tell him what we made? Help him out. Somebody here. Help him out. Yeah, it's liquidity for market makers. We have an army of server computers. By the way, I'm an engineer. Our team is engineers, are engineers as well. We have an army of server computers. Okay, this is a computer. We take options data from Opera, the raw options feed. We filter the data out only what our correlation dictates our orders that belong to market makers and zero risk trades with the market. With that, we can find market maker liquidity. Without a doubt, this is something I'm going to tell you and I want it to sink in. Every single one of these levels on my chart, 100% probability, and it never fails to show market maker volume. And these levels are printed at the start of the day. We have a method that is 100% probable. Now, picking the direction of the market, not 100% probable, of course. Nobody can predict the market. But each one of my pivots you see on the screen was 100% chance there's going to be high volume there. It only comes down to me betting in places that matter. Now, again, our data feeds are actually down today. So what's normally like simply on one chart, which is like right here, I'm kind of having to cluster it all into a futures chart. Our futures data is fine. Our equities data provider is having a emo day today. It does. Essentially, it prints levels on a chart, and there's stats that go with it. These are exploits of something in the CME group related to margin requirements. These green lines. Blue line is liquidity based on forced hand trading of market makers in trades with monthly options. The blue is weekly options. So as long as this orange line holds, we're orange to blue today. It's big ups. It's a 150 point rip. I just put a contract on. I'm gonna let it ride. I'm up 1,000 already. Plus, or I don't know. Let me check. How much am I up? Yeah, I'm up pretty much 1,000 and some change. Ready on this one. First time seeing the technique. So basically, we created a counter technique. There's no technical analysis or fundamental analysis or price history, historic analysis, multi-time frame analysis, candle patterns, chart patterns. We don't use any of that. We just use like raw liquidity. And yeah, you're missing piece of the puzzle of the technique. It's narrowing down the options of what's available to only like a few key points of interest. And that's basically what the magic or whatever it is that people keep saying. There's something magical here that we have. I'm basically just narrowing down my options to just a few spots that matter. The whole army of computers crunching data to look for market maker positions all day. Now, again, I could be completely wrong right here at the direction, but I'm never wrong to predict that there will be traders there. If I'm right, then I'm going all the way to there. So I'm missing some of my key indicators today to help me make that decision. I got to trade small. But basically from here to here, so now I have a 150-point run, the 40-point stop. It's a 3 3/4 to 1 trade. I'm wearing orange shirt for MHP. So I'll wear orange shirts to get the MHP bounce. How about that? So what I'm doing is I'm making a bet that certain probabilities are essentially seen. And it's as follows. So in the futures market, right, there's these bands right here that are of importance. You open inside the bands all the time, and this is based on margin requirements. And historically, you only have 4% of days you close above, 8% of days you close below, and 88% of days you close in the middle. So as the market blasts up, we don't trade up here, pop back in. If the market were to dip down here, I'll long it back in as well. I don't usually short bull markets, so I avoid this and wait for bull setups, which at the start of the day, I waited for my bull setup, which was there. It wasn't here. It wasn't here. It wasn't here. I waited, and you've been here all morning, dude. Space Spike, you watched it, right? I waited and waited. I'm telling stories about the dog. Girlfriend's coming here with the dog. I'm showing you pictures of the house and moving in, just waiting, just goofing around. I'd be playing Call of Duty if I wasn't on the stream right now. And then I hit the pivot I wanted. I traded small because I was highly confident that these orange line, 90% of the time, you close on the same side that you opened at. We opened above. The 90% of days will close by 4 p.m. above this orange line as well. So I take that as I'm going to take a pivot here. While I am missing key indicators that determine the strength of my trade, the higher the confidence, the better the bet. Because I don't have my indicators, I'm trading blind. Because I'm trading blind, I'm trading small. And that philosophy is what we teach you guys in the risk management classes. The less you know or the less confidence you have, trade small, but I take this pivot every single time. I take it every single time. And I always make the same kind of trades every day, and I wait for my setup. The market has collapsed today, and I just put $4,000 in my pocket just telling fucking stories and trading for 20 minutes. So I got my pivot I wanted. And it doesn't mean I'm going to be like winning every trade, but I know from here I'm going to take a 40-point stop, and even the drawdown I took, it wasn't even close to my trade. I was down 700. My stop was here, and I'm back up to green, right? So, yeah. So, retrace the MHP again. You take it long again. If it falls back to MHP again, like normally I get in on the trade and I commit. So, I'm committed. I'm not getting in the trade again. I'm not scalping back and forth here. I'm committed from here to here for that 3 3/4 to 1 trade. So I'm either going to lose $1,000 or make, what is it, 200 every 10, or make 2,000 more from here. So 3,000-ish total to lose 1,000 on the trade. So I'm either going to get it or I'm going to lose it, basically. Space, the classes are $20, dude. And we start at class 1 today. So you guys have to start from the beginning today. We start over at class 1, and after Friday the classes are not going to be sold anymore. You can't, the only way you can get in is you have to start now. So basically for Black Friday we had this idea that we would let people take our classes for basically nothing. We were going to do it for free, but then we were like, we had to charge something for it. $1 a class is what I came up with. And normally you have to have a membership or own our platform, and then you come to those classes for free as part of that. But it's a little more expensive, $200 a month, right? So that pays for the platform and all the service and all the stuff. But for $20, you can just do these classes. And you can come sit in, check it out. Who's calling me? All right, guys, I got a very important meeting at 12 o'clock. I love you guys. I got to bail, but I'll tune back in on the stream. Let me give you the link. Sign up. A couple of things for Black Friday. I want you guys to all pay attention to this. Number 1, 90% off Elite Trader Funding's evals. Great company. They do payouts. I'm a live funded trader there. They gave me real money to trade with. Bless their hearts. Good luck to them. Everything. No, I love these guys. All right. If you actually sign up for anything that you buy from them, use our link is in the description, gives us credit. And every $250 you buy using our link, it cycles back around to a drawing. You get free lifetime, free this, all kind of free stuff with us. Number 2, Black Friday here. The courses, that link I just posted, that's for you, space, $20, $1 a day. After Friday, you can never buy our courses again until next Black Friday. You have to get in the platform, which is a lot more expensive. Just take the classes and learn something. It's like buying a book. Super cheap. Gift yourself. After 3 days, if you hate it, we'll give you your $20 back. Zero risk to you guys. All you guys sign up for it. 4 p.m. Eastern. That's right. PJ, ETF link again. What's up, Adrian? Yeah. I got you. Hold on. Here's the ETF link. Like I said, these guys are good. I trust them. They pay out. They paid me out. So I wouldn't stand by it if it was a sham. All right, go here. All right, last part. That's the link. And come to our Discord. If you got any questions, you can continue this conversation over there. I got to go. I'm trading all the way to the blue line. It's about $3,000 from right. I'll let you guys know. Come to the Discord. I'll fill you in on the chat. I love you guys. Outie, I'm outie. High buying pivots. This is called position risk analysis. We pioneered this field. There's nothing like it. We look at active positions in the market so that we can find high probability pivots and predict volume. That's our claim to fame. We predict volume. And some of our marketing videos say we hacked Wall Street, but it's just we predict volume. We can see where the hidden volume will be, so I can isolate trading activity. You can't predict which way the market goes, but I can predict where traders are going to have the fight. So I can pick levels instead of trading everywhere, every which way. I wait for the trade setups I want. I set up the R&R, and I only trade with high probability setups. Hi, I'm Matt. I'm the guy that did the ETF trading competition. I got first place with a 450% gain in a single month with 80% win rate. I've been top 5 in the Robinson leaderboard and other things I trade. Full transparency and show you my broker statement. See everything I do. So I'm not full of shit. I love you guys. We'll see y'all later. Love y'all. Bye. Class starts at 3 p.m. Eastern. Class number 1 starts over today, and we go through them live. Class 1 through 20, then we circle back. Class 1 through 20, you will start from scratch. Number 1 is the best class to come to. $20. And after Friday, can't do it anymore. No longer for sale. You got to be a member at that point. So come to the classes, you guys.